Wake up, motherfucker.
Okay, yeah, the layout. Okay. Something's up. Something's up with all the connections here. But anyhow, I was a little bit under the weather, so I couldn't come in yesterday. Like I could feel a sickness brewing. The kids are back at school, so that's the problem. They just spread it to the adults, and then you kind of feel that in your sinuses and stuff. So I had to take some naps, try to kill it off, and I didn't want to assault you with wheezing and sneezing and stuff like that. But I think I'm all right now to do a 4-hour stream for you guys. Let's go over everything. This is January 16th, 2026. Connection might be fuzzy, so if I drop off, hold on. I'll try to get back. But for now, I think it's working. All right, everything's working. Good. Let's get our background music going and we'll continue our exploration of the markets. Nothing too bad happened the last couple days, so I didn't mind not showing up either. It was just like, it was expected. It was expected. Okay, let's try this one. And let's review the markets a little bit, and then we'll discuss silver again. I think that's important to end a little brief overview. All right, let's see how that's going. Okay. Let's discuss my trade so far. I only own trading 2 stocks from the end of last year, and everything else is just long term for now. So I'm still holding those. Anything long term. Okay, good. So the 2 trades I did was HUT. This one I did back in April, right? When I was like buying everything at the bottom. This was one of the, and I pretty much got out around this area where it started doing this double top thing, and I was like, okay, it's done, it's finished. So get out most of the positions. Then I started buying back around here. At the end of the year, it was worth the risk just to buy. It was close enough to 30 to this area. You could have bought back here, but I didn't. I just waited till end of the year, as long as we got close to that. And it got up to about 60-ish a couple days ago, right on Tuesday, and now like it's been retesting, so nothing much there. CLK is doing a lot better. This one I bought right at the end of the year, so just before New Year's Eve, and $10, right? So it touched 10. It's trying to get back up to this 15 area. I might sell there, but if it keeps on going, for sure, I'm hoping it can get to 20. But we're definitely running out of time. In 2 weeks, we'll have a lot of earnings from the Nasdaq. Okay, the big earnings from Intel, AMD, Apple, Google, Microsoft, Netflix, Tesla. So all the big boys. Nvidia is usually at the end of all those. It's usually 2 weeks after that. So don't count on Nvidia to do anything for a while. So if anybody's holding breath on that, it's not happening. The first tech stock of the earnings season is TSMC. So TSM had earnings overnight on Thursday. So I was watching that overnight, and I was starting to get sick then. And I was like, dude, the market's liking what in TSMC said, so I doubt it's gonna go reverse. Now, 2 days prior, we had the first bank stocks report earnings, and you can see it took a hit. See on Tuesday, big tumble from Jamie Dimon, JP Morgan CEO, talked a lot of trash about the economy, Trump, and this and that. So it kind of made the market sink. The next set of bank earnings, also, the CEOs weren't like doing a good, like saying good things. Wells Fargo, some other ones. So blah blah blah. The market just puked on that. NASDAQ followed, and you saw in the NASDAQ this happened. It retouched this yellow band. So this yellow band, this mid band, it's kind of like the area where I tend to see a lot of fighting. See, the first time you saw it was around here back in December 12th. You see it like first get attacked the day before on December 11th. It bounced off of there, goes back to the top of the box. Then it goes next day morning, sinks right there. And then with the second, third, fourth, fifth hours, it was just like straight right through. Then the next day, it opens, right? It opens down here, tries to get to that yellow area again, and then falls right back. It closes off the day below this whole box here. So this whole region of the QQQ, the NASDAQ 100 ETF at 612 to 624 is the battleground. And this yellow band marks the area where it's kind of like the 50-yard line where everything just like keeps bouncing around there. And you can see during those bank earnings, it just went right to that point, right? Goes under and then ends the day above it. So they're really trying to magnetize it to this yellow area. And after we complete this whole action here, it's either just gonna drop below and we start sinking right back to 580, or we finally stop this and move up to 635, and that will determine if the S&P 500 can make it to 700 here. So S&P 500, the SPY ETF gets up to 700, which is equivalent to 7,000 in the S&P 500 index. So that's where we are going towards, 7,000. I think once you hit 7,000, you'll see some action, okay? And it will decide to hold it, get above it, or get above it, can't hold it, and just sink right back down, or hold it, get above it, right? And then keep going above it and stay above it for a while longer. But I expect we should be pulling back. We should be pulling back soon with what we've seen in the lower indicators, like we're seeing a lot of things beneath the surface. Like you saw staples these past 2 weeks. Staples have been going up. So I see Dollar Tree, Dollar General. Now you don't want to be seeing those type of stocks take the lead. Okay, they're taking the lead pretty much from the market overall. So this one reported earnings back in December, so it's going to take a while before it gets to the next set of earnings. Dollar General, let's see, Dollar Tree, also December. Okay, yeah, okay. So if this thing keeps on moving up, yeah, I'd be worried. I'd be pretty worried. Let's see, Lululemon, yeah, still flat. When does it report? It already reported earnings on 12th. Lululemon won't report earnings until way later. Then this ain't gonna tell you anything. Okay, so the first discretionary type of stocks that will report is Tesla. So essentially, Tesla's going to be the first one then, huh? Okay, yeah. Home Depot won't report until later. Home Depot, Lowe's. Nah, yeah, this ain't going to report anytime soon. Okay, yeah, Tesla will be the first one. Okay, so Tesla's going to be important. Let's see, what day is this? It's going to report Wednesday after the close, January 28th. Yeah, 2 weeks. We got 2 weeks. So the next big tech earnings is next week on Intel. So INTC will report next week on Thursday, I believe. Yeah. 22nd. Okay, January 22nd, Thursday. Palantir. I don't think it's going to report anytime soon. Man, it sucks. It didn't even get to 200. So I'm deciding when I should just get out the rest of my positions on this one and just short it. Okay, I'll wait. I don't see anything clear right now. All right, anything is mid-band. All right, blah, 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 blah. TSMC making buku. Yeah, TSMC is making buku bucks. See here. The other two you should be looking at SanDisk. So if you're waiting to short something outside of Micron, SanDisk is another one to short potentially. So I think it's gone up 600% since it got back on the stock market. So they split off of Western Digital. Yeah, I forgot that Western Digital bought this thing, but then I didn't even know that they split back off. So the shareholders were complaining that Western Digital sucks as a stock because it's a big hard disk manufacturer. They bought SanDisk to get into flash, but because they bought the flash like unit, like it didn't reflect in the stock price. So the bulk of Western Digital is still in rotating disks and some SSDs, but for flash RAM and whatever, the thumb drives and things like that, they're not there. And you know, SSDs, yeah, SanDisk has their own SSDs too, right? I don't know, whatever. So that was good timing. So those shareholders were right to like break it off, and then now they got all that AI hype. And if you look at the blue line, that's silver. So it tracks pretty well with silver. So I'm watching all these together. You got silver, you got memory. You got to watch them. I think they are in bubble territory, so they'll be great as shorts. So when the market starts going back in correction mode and the liquidity dries up, it's really hard to keep those stocks up. Okay, so if you're looking for a place to short, I probably would be eyeing these right now. And this won't report earnings. Let's see, SanDisk. Yeah, see, late January. Again, it's 2 weeks. Gotta wait 2 weeks. I don't know if like anybody here. Another one's also late January, Thursday, 29th. And Micron won't report until way later, April 1st. Okay, April Fool's Day. Okay. It's a little bit higher than what I expected, huh? 355. Okay, just a little bit. All right. Up 5.75%. Yeah, see, so I still got a lot of my SOX L positions here. So up 13% this week. I'm not in a hurry to sell the leftovers. With the way it's moving, I think I can wait up until Intel. And then I'll be done with this. I'm getting out of all the semis. And then we should start looking at small caps. So everything is in preparation for next week, where I start discussing how to do your portfolio construction, prepare to get out into cash, move everything into your cash. So you get your 5% if you have a market fund, money market fund. Usually if you have a broker, they should automatically put, like Fidelity, they'll automatically put your money when you sell out into money market. If you don't have that, you got to manually buy some ETF or mutual fund or fund itself in your 401k, something. It should tell you. I don't know. You have to ask your broker how to do that. So when you park your money in cash, and then we'll slowly into May start deciding where to park your money into the small caps, and then we'll rotate in there. So that's the only thing you got to do this year. So I'm all about doing, like, you know, do smart. You shouldn't be working hard. So you should be thinking smart. Do everything as lightly as you can. You don't want to waste too much time looking at these things. And so since April, you know, I haven't bothered talking about this stuff. It's easy. You just buy either the S&P 500, leverage it, or you just pick a sector like semiconductors like I did, or anything else really. Biotech could have been also another one you could have gotten into. Did well, but semiconductors did better. If you really wanted to play it, yeah, you would have noticed the memory stuff starting to move up around late summer. I think August, September is when they started moving up. Around the same time, silver then started moving up, and it really rocketed in November. So around the same time as silver, actually, I think. So let's look at this one. This one's gonna, so this SMCI, they do the PC boards for most of the computing world. I like to trade this one. I mean, the last time I did it was last year. I was like down here when it went below 21 and then cashed out at 40 something. Now, it's tried to hit this 61 area several times, back in February, back in August, back in October. Yeah, now we're below it. Okay. If you think semiconductors are still going to go up and you want to play this before earnings, because you got until February 3rd, yeah, maybe you can play this one from 32 to 40. So that's a 50% gain. So you don't even need to wait for there, because like if Google reports well, Intel reports well, AMD reports well, that should be fine. Yeah, you should be able to get enough from those. Apple reports well, you'll be good. So that could be a trade for you to take, because it's one of the weaker of the semiconductors. Apple, oof. Man, Apple's dropping below 250 again. I don't know. And how's this earnings going to do? Thursday, 29th. Man, everything's on the 29th and 28th. God damn. I don't want to be waiting that long. Ugh, terrible. Okay, let me see. What else? Anything else? Home builders. Okay, I have some articles on home builders. I'll talk about that one. Let's see. Software, terrible. Look at that performance. Software compared to the S&P 500. Wow. If it wasn't for semiconductors, this whole market would have just puked already. And then you look at like internet communication stocks. Damn. Dude. Yeah, there's just so much underneath that looks bad. For the large cap and mid caps anyway. And then when you have materials up since New Year's, industrials up since New Year's. See how utilities are doing. No, utilities flat. Staples up. And how about healthcare? Healthcare, no, sideways since New Year's. Ugh, okay. Yeah, nothing there. Okay, and then China, I still haven't decided. I'll talk about a few Chinese stocks actually when we go over those. I might look at China again. I haven't looked at China at all since last year. Like last year, meaning like end of 2024 last year. I really haven't paid attention to them. Let's see what Alibaba's doing. Alibaba was up. I think Alibaba is one of the few Chinese stocks that have been up. Yeah, barely up though. Nothing. Mexico was trying to go up too. Okay, Mexico's still doing better than China, so I don't care about that. So if you go two, 3 streams back, I talked about the cement stuff. Yeah, you can look at that for the Mexican one. MSTR, is it time to short it? No. Nope. It tried to hit 190 several days ago. I'm still gonna wait for 200 something, 240. Then I'll short it again, because Bitcoin looks too bullish. Bitcoin will definitely try to hit 100K before it pukes back down, at least. If people are lucky, you could trade along up till 107,000. Up here, back to this band. 110 maybe. Yeah, I wouldn't short that stuff here. It's not attractive. And I'm not gonna day trade that thing up and down, even though it's like very volatile. You could day trade it, but yeah, I'll show you. Like if you wanted to day trade, probably MSTR is one of those stocks that you could day trade, because every time it hits a resistance, like 2 days ago on Wednesday, you see the first hour it hit there 190, this dotted purple line, and it just fell right back down, and it fell back down. It tried to go back up after it almost nearly hit back at 160. It touched that moving average here, this 40 moving average, tried to climb back, recover a bit, and then just the rest of the day it went down again. So yeah, this thing you would day trade. So if you go down to like some 15 1-minute chart, yeah, you could probably spot where you want it to short these things. Yeah, but ugh, no. I want to wait for, if I'm gonna short something, I want this. This is what I did, right? This is what this was the main short here, and I did some shorting here, but this was like a shorter arm of the whole drop. The real meat of it was here, and then after that you got to wait again. So you got to be patient. A lot of the trading game is just being patient. Wait for it to hit the targets you want, and then you see, okay, this is the right condition where I'll take a chance and short it. Because right now, if you look in the daily, you see it went up, it pulls back, it's still fine. Look at the daily, you see it's an improvement on this moving average here, the 18, and then you got the 40 daily moving average is starting to flatten out, and it's still holding above it. So once these two start flattening out, they start kissing each other, and then the MACD starts moving up, and then you see the ADX start moving up. So this is the Joe Rabel technique. That's how you would look at it. You just look for the patterns where, okay, you see it's building energy. Now, if you wanted to short it, you would have to wait for it to get closer to zero, see thing puke, fail, roll back up, see the red DI line shoot up, you see the blue start moving back up, then you short it from there. So if you wanted to short at the bottom, you have to wait for those conditions. But in my estimation, the way Bitcoin looks, as like this thing actually performs worse than Bitcoin right now, MicroStrategies, but Bitcoin itself is improving a lot better than this. So this thing is going to play catch up. All the people here that are trying to short Bitcoin and they still think Bitcoin is going down, they should have been waiting for it to recover a bit, then short, because Bitcoin, it's going to move up. It's going to move up. So you're better off shorting Litecoin or something. Litecoin has been doing terrible. Let's see, how's Litecoin doing? Yeah, Litecoin's terrible. I don't know why exactly, but it seems to be one of the worst performing cryptos right now. Well, ever since New Year's too. There's huge volume there. Must have been some news. I don't know. Nobody uses Litecoin anymore. Well, I don't know if anybody ever used Litecoin really. So, because people usually say Bitcoin is the gold of crypto and Litecoin is the silver. So then if Litecoin performs in a certain way compared to Bitcoin, it kind of tells you certain things. I don't know if that's really true. Silver with gold definitely has something. And we're going to discuss that right now. Silver versus gold ratio. So the last time we've had this kind of movement is in May of 2011. Okay. And then here in the 70s. All right, we got some pretty good one. Kind of got one in the .com here, and then yeah, pretty much this. I don't know if this one counts. I guess going into the financial crisis and then entering the financial crisis and then puking everything there, silver. So with silver moving up this high this quickly, it's probably one of the fastest moving ones so far. If this thing lasts as long as the 2010 to 2011 time when silver was outperforming gold, this could last a while. We could be in for a long trip. So then I probably wouldn't be shorting Micron yet. Maybe we got another. So this is a monthly chart here. 2, 3, 4, 5, 6, 7, 8 months. How long have we been doing this thing? I'm gonna start counting from here, October. All right, October 1, 2, 3, 4, maybe 4 more months. There must be a typical number of months. It looks like it's about half a year, I think. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, maybe about half a year. All right. Okay, I'm gonna play this video. And let's see, this one was posted just before New Year's. And since we're still trying to climb the wall of worry, I think this is important to review. So keep in mind, this is two weeks old, okay? But still relevant to what we're talking about. Okay, let's see.
To be the price and move that we're seeing in silver. In today's stock market report, we're going to really dive into some of the interesting intermarket things that I'm seeing take place with silver, and also some of the signals that are very rare to happen. But more importantly, we're going to dive into what's the market's pricing in for next week for silver. We're going to look at some other intermarket analysis around copper versus oil. We're also going to be diving into some of the signal charts and really kind of lead.
Okay, let's get
the physical
going.
bullion for.
All right. Skipping around here.
The physical bullion for trading way above spot price, right? I'm going to try to push that all aside for this video and just show you some more of the intermarket stuff taking on, and the technical and also the quantitative side of what's taking place in silver to prepare you for if this is something that you actually want to trade. Because to be quite honest, so I was talking to somebody earlier about this, but the macro drivers, the fundamental, the narratives, they don't do you much good without price confirming, right? It's all about price in the end, right? If you want to make money, you need to know where price is going, or you need to know what you're going to risk, that is. So that's what we're going to talk about. So silver's been breaking up. So some people have been talking about this is a cup and handle pattern dating back to 1979. It just broke out to new all-time highs. It's screaming higher. On a log chart, this means it's going way higher. Yeah, they might be right, but the only thing is when you talk about technical analysis, when you look at a cup with handle, if you just look up the key characteristics regarding a depth of base, it's like 33 to 40-ish%. And it says to avoid bases that are 40 to 50. This right here was at 50 and we dropped down sub 5. So this is like a 90% retracement in this cup. So to be quite honest, if this is what your pullbacks, and then you play with the trend, because typically strong stocks get stronger. Now, if you look at the weekly chart here of S&P 5, or sorry, of SLV, you can see this was a little bit more cleaner as price action started getting tighter and then breaking out. And what I'm pointing out here is just almost a record size amount of volume traded on the SLV ETF on a weekly basis. We haven't seen that much since earlier 2021. This is coming out of the pandemic, right before there, out the pandemic. And then also prior to that was a massive move in volume there in 2011. Now, this is where the intermarket stuff comes in. I'm pulling up a silver to gold ratio. You can look at a gold to silver ratio, don't matter. But silver to gold ratio dating back to the 1970s. And what you'll see here is every once in a while we see these massive spikes. And typically around these spikes, there's actually something going on in the economy, potentially globally. And we're going to dive into that a bit. But I wanted to measure these movements via the rate of change. So what I'm doing here is just using a standard 12-period rate of change on a weekly chart. And what I noticed here is that dating back to the 1970s, you can look at about 40%. When we see a move at 40% or higher, right, it doesn't last long. And my thought was, okay, well, what happens to the price of silver? And then also, what's happening to the stock market itself when this happens? So let's start off at the price of silver first. So in order to kind of see what this, when we get a massive spike, when silver outperforms gold by 40% on a weekly 12-period rate of change, what happens to the price of silver? That's where this thumbnail comes in. You can see the red dots are highlighting the periods where we see that signal. We just recently got one. Okay, so it's hard to see here. So what I did was I zoomed into each of these periods. So we could go back over here to 1974, and you can see it actually marked a top here, shorter, obviously a short-term top, but it still marked a top, and it went through a period of consolidation, and this is a quite a significant move to the downside. Now, if you go to the mania of silver, where we got into the 50s, this was in 1980, so 1980 was right here. This is that squeeze right over there. What it's highlighting is that we got that 40% rate of change between silver and gold, and it ended up consolidating the price of silver before both metals actually went up significantly there, seeing that squeeze higher. If we continue on and we look at the 1987 surge, you can see this actually marked a couple of peaks here in the price of silver after we saw that rate of change really rapidly increase. If we continue on, you can look at the 1997, and then also 1998. This is going into the .com bubble in the S&P 500 and the NASDAQ. And you can see, right, we started getting these rapid rate of change after a strong move up in the price of silver. It went a little higher and then reverted. And then boom, we squeezed up higher and we got that reading once again, which marked a top. If you look at 2011, we started getting cluster of the readings right here after a massive squeeze higher. And then we started to find a top there as well. And then coming out of the pandemic, you can see we had our reading right up here. And then we went through a period of consolidation and pullback. Now, if I zoom in right now, where are we? Well, we broke out, we saw a massive move higher, and we're finally getting one of those 40% higher readings between that ratio. So in short, what is this telling me? It's telling me that when we get these readings, one, they're very rare. Two, you typically go through periods of consolidations and or pullbacks. Now, basic technical analysis, one of the principles is strong stocks typically get stronger, which means what? It means that you can probably expect further prices to the upside. However, with a move like this, you typically get some types of consolidations and pullbacks in the very near future. Okay, and also to note on that, typically when you close at the highs of a trading session, you typically get follow through. The next day, this is on a daily chart, but that's kind of common. So we'll see here. Now, if I just show you the silver to gold right over here, and I layer it on with the rate of change, I wanted to see really what happens to the S&P 500 maybe during these spikes. Is there anything significant that might be happening? And you can see over here, nothing too significant, but what I did notice was when you go back to like the 80s, you can see that price was going through periods of volatility actually in the S&P 500. And then over here in 1987, the market still continued to press up higher, but guess what? Very shortly thereafter, we had the 1987 crash. In 1998, we actually had the S&P 500 go up a little bit higher, but what's so interesting is shortly thereafter, right, in weekly terms, I mean, this is a few months, we had long-term capital management blow up, right? And then eventually led to the dot-com bubble. In 2011, there was also a lot of stuff going on economically, right? Ben Bernanke, all kinds of stuff. So look that up if you want to look more into the depths of what was taking place in 2011. But that shortly thereafter, we actually saw quite a bit of volatility hit the tape there as well. After the pandemic, it's kind of hard to see, but we'll zoom in right here in a moment. This was where we were coming out of the pandemic, but we did recently go through some periods of volatility right in and around before breaking out higher. Now we're getting back up into that area again. So if we zoom into these areas, right, you can see this was in 2020, I believe it was. Yeah, 2020, coming out of the pandemic. This is that little area that was hard to see, but you can see when we got that rapid rate of change reading, what did the market do? The market actually went from a peak high to low of 11%. And this was coming after the pandemic. In 2011, right, there's some stuff that was going on, the ceiling crisis, et cetera, et cetera. What did the market do? Well, the S&P 500 went a little bit higher, and actually from peak to trough, we went down about 21%. So a very short-term snap, bear market before moving up higher. And we had obviously some monetary stuff take place there. Now, if we continue on and we look at 1997 and then 1998, what happened? Well, higher. 1987, right? We went through about an 8% drawdown. Then we squeezed higher, and then we saw the blow up take place in mid to 1998, coming back to these specific levels. If we continue on and we look at the 87, you can see what happened here when we got those readings. We just saw periods of kind of pretty strong volatility in the markets before seeing a massive squeeze up higher and ultimately led to the 1987 crash. And we look now at the 1979, date back a little bit further. We got the readings up here a few times. This was during a time of volatility where we saw 11% drawdown. Then we saw a squeeze higher, and then we came right back down for a minus 18% move before heading higher. So the reason why I'm pointing this out once again is because when we start to see some of these metals really start to take off like this, or parabolic type moves, doesn't mean it can't go higher. What has been met with the S&P 500, what has been met with those specific metals is periods of consolidation, more volatility. And I think that's something that we need to prepare for, or at least be aware of, that has happened in the past. If we continue on, there's...
All right, guys. So in summary, all we can predict in the next coming months is when silver starts outperforming gold like it has been, we can expect some volatility in the markets. Okay, that's it. That's all we can know. So it can go down and up. It doesn't tell you where it's going, but something's about to happen. We know that China is trying to boost domestic consumption. We know that there is geopolitical risks, right, with Iran. We know that in May, we will replace the Fed chairman. So all these things are coming to a head. All these things are coming to a head into May. So I'm going to wait and see what's going to happen. All right. But I think we will go down a bit and then shoot right back up. And that means I'm going to reposition, take away from the large caps, go into small caps. Small caps will benefit a lot if the rate cuts accelerate, and we'll make money that way for the rest of the year into 2027. Then in 2027, we'll await the crash. So if you go back to the first stream I did, that was the plan. That's the game plan. Okay. People expecting a crash in 2026, they're 1 year ahead. It's been delayed to 2027. So that's where we have to position ourselves. And so next week, we'll start looking around at all the small cap stuff. So what's up, Dalmatian Dog? Yeah, this is live. We're just doing stock stuff right now. Okay. So let's go over some things. And I'll show you what I see and what other people see. Right? Let's see. This one, this one, this one, this one. Let's see. Okay, this one. So this is the updated chart right now. So he showed you that ratio chart with a rate of change. Rate of change meaning how fast something moves up. So if you know calculus, if you go between position A and position B, how fast do you move between those positions though? Like, what's your speed, basically? The speed is a rate of change, right? That's the rate of change that you move from position A to position B. So that's all this is measuring. We're just measuring how fast silver has moved up over 1 year. I believe this is 1 year. And we got these spikes up on these years, 1974, 79, 87, 98, then 2011, 2020, and now today. All right, this is the highest spike we've seen in silver. And actually, I can look up the market cap for silver. It's been moving up. Market cap. And I can rank the market cap. Right now, the top asset in market cap is gold at $31.881 trillion dollars, and that beats out silver and gold and Nvidia at 4.5 trillion and silver at 4.9 trillion. Okay, the rest of them you recognize: Google, Alphabet, Apple, Microsoft, Amazon. Then we get into Bitcoin. And if you want to know where Ethereum's at, it's all the way down here, 395, so at the 35th position. So outside of Bitcoin and Ethereum, crypto I consider a small cap environment, okay? Because most of the crypto market is just small caps, all right? Bitcoin is kind of in its own world. Yeah, Ethereum also, well, maybe you could consider that a little bit more, yeah, I don't know what to consider those things, right? But I'll treat that whole market together combined, because I doubt, let's say, like, I look at the total market cap of biotechs right now. So biotechs being like, it's similar, right? It has a lot of risk in biotech. You're kind of gambling. You're betting on technology that may or may not come through as a business. So they have a lot in common with crypto. So let's say total biotech's market cap. Let's see what AI says. I'm going to look it up here. See what the Google AI tells me. Can't generate AI overview right now. Well, looks like AI failed me. Okay, in the NASDAQ composite. Okay, let's see. I'll reword it. So, as of late 2025 and early 2026, the biotechnology industry on the NASDAQ has experienced strong recovery. While figures fluctuate daily, data indicates that the total market capitalization of biotechnology industry is roughly 1.1 trillion to 1.6. So about Bitcoin. So of the crypto is about 2 trillion, right? So that's equivalent to about a percentage of the, yes, see, so I was right. So all the total small market cap of biotechs is the same, pretty much the same. as crypto. So I think they're similar. They have a similar look and feel compared to those. The next one, number 9, is TSMC. We got Broadcom, Saudi Aramco oil, the Saudi oil. It's not traded in the U.S. stock market. You got to go to Riyadh and trade over there. We have Meta, Tesla, so that's 12 and 13. Berkshire Hathaway at 14. Walmart 15. Eli Lilly 16. And then JP Morgan at 17. Then you actually have one Chinese company, Tencent. Tencent is, one of the Chinese companies and 40% owner of Discord. So thank you, Tencent, for giving us Discord and destroying people's lives in America. That's it. Then you got Samsung, Visa, and Platinum. Platinum at 575 billion. Okay. And you have some few ETFs I didn't mention here. You got the Vanguard S&P 500 ETF at 800 billion. All right. Okay. So I think that gives you an overview. But yeah, we are at the point where we see something pretty significant. What does that mean? I expect some type of volatility to come in the following months. And this is from Tom Bowley. Okay, Tom Bowley does the ratios too. Okay, here we have the ratio of the NASDAQ 100 to the S&P 500. So when you look at it, so you look at the bottom frame right now, you see it move down, but it's not something that's noticeable, right? It doesn't shock you. If you look at the top frame, it's very clear it's been moving down since June. All right. And why is there a difference between these two? So what Tom did was he stripped out the gaps. Okay. So from the market close to the market open, there would be a gap in between sometimes. Sometimes the gap is down, but mostly the gaps are up. Now, if you remember from April, when Trump started pulling back from talking about tariffs on people, saying oh, okay, never mind, I'll give you a 10% tariff instead of 20%. Then he eased off on China, and then you saw the market keep moving up from May to June. There were huge gaps up, but during the day, well, how did the market respond? So when you have the gap up, you open higher. What this thing captures is, well, were they holding and buying more, or were they kind of selling off? So what this tells you is when you remove those gaps, actually underneath the surface, they were selling bit by bit. You have to remember, these people own trillions upon trillions of dollars worth of stock. They don't buy and sell those in one sitting, right? In 1 minute. They'll do it slowly as the market moves up. So each time the market makes new highs, they'll just slowly sell it off so that you don't notice it. It doesn't shake up the market, because if they dumped everything at once, it would crash the whole system, right? You got to do it slowly. So big people are already putting in sell orders at certain specific points. And what this shows is that, people were selling the NASDAQ stocks as we were moving up. Between the NASDAQ to the S&P 500. Okay. So I don't think people up there are buying it at these prices, right? They're selling it off to you, the small holder, the small hands, the weak hands. So the next time we have an issue with the market, it's probably going to be very easy to push it down again. Now, do you think it's going to be like April, where we had a 30% drawdown from the February high or January high? I don't think so. Maybe you'll get 10%, 15%. That's my guess. I'll read an article that says that. Okay. Now, this one is small caps versus the NASDAQ 100. Here we include the gaps. It's moving up. That's what I've shown you too in the past few streams. I said I'm looking at small caps. Now, if we include the gaps, it doesn't look as attractive. It's kind of sideways. It recently broke out, but still, it's showing that people are buying the small caps. Okay, so they are rotating into that area. Now let's look at discretionary versus staples. So Lululemon versus Dollar General. If I have the gaps, yeah, it's moving down, but it's still flattish, right? And you see before the big tariff scare of March to April, you had that same pattern here. We've been going at it for a lot longer than the one shown here. Okay, so this one strips off the gaps. So that's why you see this. This is where we're gonna have to get work. Now, if you have the gaps, this is what you see normally. It's very short, very brief. You see it go down. You see this thing move down as well, but it's not really giving you any warning. So right now, I see the warnings that this shows, but it's not like eye-popping so far, okay? I see it, but a lot of times these signals don't really guarantee that it will happen right away. But we do have 2 weeks, though. It could happen during one of those earnings or several of those earnings as we get into the 27th, 28th, 29th of January, where we get everything all put out together. I've got some good news. Oh, okay, Sin7 has some Boyd news here for you guys. I've got some good news. I was able to pull some strings and get Jeremy fast-tracked onto our EBT Snap program. They allow me to use a screenshot of his bank balance as verification of poverty. Oh, very nice of you. Very good. Very good. Yes, I know, right? If you got less than $200 in your bank account, that's gonna mean a lot here, you know, as we move on. Perfect. Get some Snap benefits. Okay, what's the next one? Oh, the Big Mac. So that's a good timing. We got the price of Big Macs. This is where Jeremy couldn't buy his Big Macs at. Come on, you know, you mess with McDonald's. When we talked about McDonald's in the last stream, we talked about the price of minimum wage priced in Big Macs. So right now, the price of Big Macs in the United States averages around $5.79 as of early 2025, but varies significantly by location, ranging from under $4 in some areas to over $7 or even $10 plus for a meal in expensive cities like San Francisco or Los Angeles, due to local costs and inflation. Globally, prices differ, with Switzerland often having the most expensive, while countries in Asia and Eastern Europe often having the cheaper ones. Okay, so you can take a screenshot of this. Okay, there you go. I think, yep, you can take a screenshot of that. And we can continue on our journey. And if you want to know about coincidence, I think not. Everything is coincidence. Everything is coincidence on this show. Anyhow, what articles do I want to talk about? Do I want to talk about AI next? China? Which one? Which one to talk about? Tesla? Cars? Let's see. Germany? Trump? Mortgages? What's a good segue? All right, let me think about where I want to segue the show. Let's pause here. And I'm going to bring up the whole AI stuff here. All right, this is from Goon Squad.
The era of fake e-girl influencers has started. Oh God. Oh no. Goon Squad. Goon Squad. I've got an idea. You're not going to like it. Okay? There's a lot of you that spend 4 hours watching this live stream every single night, 4 nights a week. Just imagine if you go live and you start farming money from naive men across this planet. We're going to set up an operation. I need 5 capable young men who are willing to go the distance. We're going to get this Goon Squad compound, boys. We're going to make it happen. The only way through is forward. I need 5 men who are willing to take the risk of permanently fucking their psyche up by pretending to be a woman on the internet 4 hours a night. That's all I ask of you. 4 hours a night. That's all I need. We do it for one summer. And I promise shit 85%. See a beautiful Montana sunset one day on the 1,000 acres of the Goon Squad compound. Woman, we're gonna make this shit happen. Somebody's got to do it. It might as well be you guys. It's risky. Start seeing yourself as a woman and start putting on women's clothing and like cut your dick off and your balls. But if you can make it through, if you can pull this off, I promise you, absolution awaits. There's no humility in poverty. And that's do this alone. All right? I've got way too wide of shoulders. Nobody's going to sub to me. It's going to have to be one of you guys. Please message me on Discord if you're willing. No, you're very, you're pretending like you're not excited. But if one of them gets sick, we'll have you fill in. Yeah, we're going to call this Operation Amaranth. Moving.
All right. So we got some other examples that was floating around the interwebs. Here's some Stranger Things for you. All right, and then we have this one. And then we have this one. Anyway, so this apparently is made by this company. Let me get you the Twitter link. See, is it this one? All right, hold on, folks. Try to get the right Twitter thread. I don't think Twitter's working today, huh? Twitter's been acting goofy today. Dang. Come on, load it, load it. I don't think StreamYards is sucking my memory so bad that it can't load this thread. Okay, this is not the one I'm looking for. Must be this one. All right, let's see. Come on, Twitter, load this one. Okay. All right, it's this one. All right, let's see if we can open it up on a... All right, come on, come on. Oh no, I gotta log in. All right. Okay, let me log into the account and I'll get it for you. Lame. I mean, man, you could used to do this stuff without logging into your account. All right, here we are. Let's share the screen. All right, here we go. So in this Twitter thread, and you can see the link on the top there, all right? So it was created by this Kling AI, klingai.com. You can try it here. So Kling AI 2.6 motion control. Okay, so you see the Twitter account. So if you're interested in this, this is what they're doing. I don't know where they're from. Joined in 2024. Elon Musk follows them. Great. Got TikTok too. They got Discord. Oh god. Oh god. Oh man. See, this is why I don't use Twitter. God damn it. Oh. Yeah, I think you can figure it out. All right. I'm not gonna get into this any further. But yeah, the whole e-girl thing, it's coming. It's coming. It's coming to a head. We got people pretending to be girls and shit right now. And like one of the things I've also noticed is like how do we do advertising? A lot of ads are generated by AI, you know? It's just a lot easier. Like John wants to do this whole thing where he does the staging of his houses. And why don't we just use AI for this?
Use AI to skyrocket our sales. The first tool is Photo Room. You can literally upload your product and have it generate custom backgrounds for you to add to your website and Facebook ads. This is literally AI generated, so we no longer have to take the photos ourselves. I honestly can't tell the difference between what's real and what's not anymore. The next tool is Creatify, and they've literally made it so simple to create TikTok ads. Literally generate custom AI videos that look ultra realistic. That way you can make videos without having to film them. The best part is I put a full training on this on my YouTube channel. Give me the word AI tool and I'll send you all the links.
Yeah, so I mean, fuck, man. I think that video itself is generated by AI. Like that whole thing is generated by AI, man. So it was an AI ad for AI ads. Holy crap.
and animate it with AI. Or with an ugly empty space, choose a style here, and boom, bam, bam. Then find directly here where to buy the specific product and reduce decision fatigue. That is crazy, but this. Steal those beautiful interior designs from Pinterest as a reference here, and boom. Then animate your best images with your favorite AI video tool. In real estate, if you sell dreams and possibilities, they will beg to buy or rent your home. Just remember to always take your photos in wide angle to make the space look bigger. So with Colab,
Yeah, you see that? John doesn't even need to do anything anymore. He just takes big wide angle shots of his places and let the AI stage it. You could just have an empty room and stage it however you want with the AI tool nowadays. Anyway, yeah, this is live, Dalmatian. I already said that a while ago. Sorry, I'm not responding to anything too quickly. I'm kind of like getting over from being under the weather for a day. So I'm pretty lethargic. Oh, man. I just want to update you guys on the markets a little bit. Nothing too much, but definitely watch the silver. Watch those memory stocks. Kind of looking more and more bubbly. You know, doesn't mean it's going to crash tomorrow or anything. But, yeah, we got another week to go. But I'd be a little bit more worried in the next 2 weeks. So next week we'll only be doing... I'll break up the streams into like subsections, get everything tighter, the show tighter, produce it better with transitions between topics, you know, split off like anything talking about drama into a different section, maybe split it off altogether. But yeah, we'll see. Let's see what else we got. So I did a little bit of AI. I want to like take a little break right now, and then I'll decide if I'll continue talking about AI or we're gonna move to China. I'm not sure what else I want to talk about AI stuff. Maybe that was it. Maybe that was all I had in store. China's probably more important. Then we get to the big tech things. You know, this one was interesting since we're still on the AI topic. Let me pull this one up for you. Like, you know, I'm using the nano banana, whatever they call it, the nano banana pro to make the thumbnails right now, but I'm not at this level where I just code it up like this. Like, you see this shit? Like, let me zoom in. So if you're on your phone, you should be able to see this, right? Like, look at that. So I want Sydney Sweeney, Billie Eilish. I want to make them wear something black and white. Okay. And then you make this thing called a prompt. And you encapsulate it with these parameters here. It's like, what the hell? Skin. Fair porcelain skin. Soft, natural freckles. High detailed skin. Pose. Standing. Slightly leaning forward. Holy crap. You know, my game is so weak. Like, when I make my thumbnails, I'm not at this level. Like, dude, these parameters are insane, man. This is wild. So yeah, you can screenshot this. The link is in the. You should be able to screenshot the link too. Okay. So let me undo the ad blocking here and image blocking here. So let's here we go. You see that? That's the result. Black and white, contrast. You got the freckles. Yep. Okay. Got the leaning over part. I guess you got the background here with the snow-covered ground, atmosphere, crisp winter atmosphere, pine trees, location, outdoors, snowy forest. Wild, really wild. I'm not at that level. I gotta learn better, you know, to use the AI properly. Yeah, this is wild. And one more thing for the silver stuff. I think I have one more thing here. And then I do have some more Twitter things to talk about, but I'm gonna take a little short break. We're gonna take a little break, do Boyd stuff, because we are at the like 1 hour 6 minutes here. So it's been an hour. Breaking. Well, this was breaking in January 13th. Anyway, breaking. CME Group will set gold, silver, platinum, palladium margins as a percentage of notational value instead of a fixed dollar amount. Can you translate that for me? Let's see. Can you translate that for me? I think somebody here translated it into normal English. I don't know. Somebody here. Okay, let me see if this guy has a good explanation of what that meant. Dan Brisbois. This is a quiet but massive shift that most people will scroll past without realizing what just changed. Margin as a percentage of notational instead of a flat dollar amount means volatility finally gets priced honestly instead of being papered over. The light bulb moment is this. Fixed margins were a subsidy to leverage in calm times and a cliff in chaos. Percentage-based margins flex with price and risk, which reigns in reckless positioning before it blows up clearinghouses. This is CME future-proofing metals market for a world where gold isn't sleepy anymore and silver isn't a toy. It also signals something bigger. Commodities are being treated less like sleepy hedges and more like systematically important assets. When exchanges start tightening, plumbing, instead of issuing press releases, it usually means they see storms forming before everyone else does. Oh, well, you know, the dollar has been a Federal Reserve, a world global reserve currency for like about since what, 1944, since the Bretton Woods Agreement at the end of World War II. So that's about nearly 100 years, right? 80 years so far. So we got about maybe 20 more years to go. So close to 20 more years. Yeah, it'll be interesting next 2 decades. Given that we should have some issues in not 2030, some big event happening then based on cycles. Something then will probably change how people treat the dollar. And yeah, people going back to gold make a lot of sense. So gold will be a temporary stopgap in the transition times between one reserve currency to the next. Okay. It could be it. I don't know. Anybody else on this thread that said anything interesting? I don't know. You could take a screenshot of these people replying in text, but I don't see anything else. Let's see, what does this guy say? Anything else in silver? No, nothing. I think people just blah blah blah. Nothing interesting here. Old news now. Well, this guy says it's old news. Okay, let me read this one. This say old news. I could barely read this. Bro, I can't understand this shit. What does this mean? Yeah, this is why I'm not playing with futures, man. I don't understand what that means at all. All right, whatever. You can screenshot that, but I got no clue what that means. That's over my pay grade. I think there's way too many comments by bull. So that was a bullish comment, but you know, I want a contrarian opinion. So I want to see someone that says like, "Oh, this is a nothing burger," blah blah blah. But I think most of these people are bulls. So you're getting a biased opinion right now if you read this thread. Okay, this one's pretty good. This one's pretty neutral. All right, this is from Luke Butt. All right. Before, traders had to post a fixed dollar amount as margin. Okay, so that's your collateral, no matter where prices were. But now margins will rise and fall with the price of the metal. Why this matters? When gold or silver prices increase, the required margin automatically goes up. That forces traders to put up more cash to hold positions. Okay, this reduces excessive leverage during volatile markets. So they want to put a clamp on the gamblers. Yep, makes sense. In plain terms, CME is saying prices are moving too fast to use flat rules anymore. This also might be a sign that exchanges expect higher volatility. That's what we heard in the first one, which is like, you could look at it in a bullish way, saying that silver will go a lot higher, a lot more higher. For traders, it means more cash required during rallies, harder to use leverage, faster forced liquidations if price moves against you. But for the market, it helps prevent blowups when metal spikes or crash. Very neutral. So that's a neutral opinion. They just want to tamper down the volatility. Okay, that's it. Okay, good. That's all I want to talk about there. All right, good. Covered that. All right. Okay, taking a break now. Let's look at. Let me switch gears to the car stuff.
Toyota 2025. And we noticed that on the screen, you can't use navigation unless you pay a subscription fee for it, right? Which is insane. Like, you can't just hook your phone up and use navigation on your phone. That's free. So we looked at the subscription fees, and it's $15 a month. It's also $15 a month to stream music to the actual screen in your car. Okay, together it's $25 a month. Then I also saw somebody on a forum say it's $8 a month to be able to see your oil level and your tire pressure. The car's like 40 grand. Oh yeah, remote start. You have to literally pay a subscription fee to get remote start. The vehicle is capable of all these things. What the fuck reality?
So I have a Toyota product. I needed to go to the dealership. They gave me a loaner. With the loaner, she's giving me instructions on how to start the car and all that. Honestly, it just was overwhelming and overstimulating. It wasn't just a regular norm for this 2025 situation. And it had cameras in it. And I don't mean just in it like for your safety. It had cameras to where it's watching you drive to make sure you're doing what you're supposed to do. So if you touch your phone, the car's going to decelerate, do all this different stuff. And also, if it's tracking other cars, everything around you, so the car automatically decelerates, does this, does that. And that seemed interesting enough. But when I connected a device for the Bluetooth, it kept disconnecting every time I got in the car. And she was stating, oh, that's because it's based on subscription. And when she told me all the things that were a part of said subscription, mind you, the Toyota product that I'm talking about, they're about over $70K for the vehicle I was in, brand new, for what I'm looking at. So you're telling me what I paid for my car, right? My vehicle. And it's on the same with that, and you think I'm going to trade my car in, which still has buttons that I can press for my sensory self and feel and do all the things I need to do, and you think I'm going to trade it in for a car that's literally watching me when we're already in that kind of state of where you're being supervised or being watched all the time, and you think I want that, when I know for a fact a lot of these cars are autonomous and they're saying they're not, and they are. So in the event you don't want to drive your car somewhere and they're telling you to turn it in, that car will be able to literally turn itself in. It was about over a decade ago, I was in a Ford renting it, and the car, if I went over the speed limit, the car literally decelerated on its own. So I know for a fact these cars can drive themselves if they don't want you to go somewhere you won't. So you better be careful. If I were you, I would invest in these vintage cars from the 1950s.
Yeah, all right. So, 2 days ago, Elon said this: Tesla is shifting FSD to a subscription-only model. So FSD is like the full self-driving shit. Tesla will be ending one-time purchases of its full self-driving system after Valentine's Day, transitioning the feature to a monthly subscription only. All right. Okay, bro. Tesla CEO Elon Musk confirmed the upcoming update in a post on X. No more FSD one-time purchases. Per Elon Musk on his X post, Tesla will stop selling FSD after February 14th. FSD will only be available for a monthly subscription thereafter. This marks a shift in how Tesla monetizes its FSD system, which can now be purchased for a one-time fee or accessed through a monthly subscription. Oh god damn. See, this is why I'm gonna keep buying older cars. I'm definitely not gonna be buying something from the 1950s though. That's too far. But I'll hold it off as much as I can. I don't think you can get parts that cheaply, right? FSD subscription model has been $99 a month in the United States, while its one-time purchase option is currently priced at $8,000. The one-time purchase price has swung wildly in recent years, reaching $15,000 in September 2022. At the time, FSD was proficient, but its performance was not on par with version 14. This made its $15,000 upfront price a hard sell for consumers. Tesla's move to a subscription-only model could then streamline how the company sells FSD. It also lowers the entry price for the system, as even price-conscious drivers would likely be able to justify FSD's $99 monthly subscription cost during periods when long-distance travel is prevalent, like the holidays. Oh my lord. Jesus, man. Wild. Dalmatian Dog, you should probably charge your phone up to 65%, in my opinion. If you can get it to 70 and 80, it's a lot better. But 65 would be a minimum for me. All right, you can read this at your own time. All the links is in the descriptions box. We got another piece of news several hours ago. Germany forces Lexus to remotely kill car heating in dead of winter. Dead phone batteries during emergencies are dangerous. Oh, damn, Dalmatian. But frozen windshields on winter mornings, apparently that's a luxury German authorities won't let you solve anymore. So, I don't know what that's saying. Is there a German regulation to make sure phone batteries are charged at a minimum level? What's that minimum level? I say it's 65. What does Germany say? Anyhow, your Lexus remote start just got remotely murdered by regulators who decided warming up your car counts as environmental terrorism. Toyota spokesman Ralph Mueller confirmed the parking preheating feature, previously free via My Toyota or Nexus Link Plus apps, is now deactivated on combustion engine vehicles across Germany. The reason? Legislators consider remote engine warm-up unnecessary running that creates avoidable exhaust pollution, with Toyota disabling the function to protect vehicle users from fines. Oh man. Anyway, you can read the rest of this yourself. Link is in the description. Okay. Let me read this last paragraph though. The heating wars come to your garage. Car idling bans stem from Germany's broader assault on fossil fuel heating systems. This crackdown connects to Germany's Building Energy Act, requiring 65% renewable energy in new heating systems by 2024. The law aims to phase out gas and oil heating by 2045. But critics highlight massive costs and slow adoption rates. Gas still heats 56% of Germany's 43 million apartments. Okay. Well. Interesting shit here. You better decentralize your technology, bruh. You better decentralize your technology. Man, Germany, fascinating culture. Fascinating. All right. Let me see. Let's see. Go mortgage or China next. Before I decide, we'll take a break. Let's get back into the Boit. Let's see. What updates do we have from the Boit? Let's see what do we got. What kind of updates do we have so far for you guys? Hold on. We had a lot of updates. We had the ending of the Monty show. We had some wild stuff happen there. I don't know if I'll get to that though. Maybe it's too wild for this show. Maybe it's just too wild. Yeah, maybe it is too wild. I don't know. But since we're talking about finance, let's talk about this first.
Yes, please. Both.
What? Okay.
Oh, no, sorry. Cream.
Cream?
Cream.
And 2 waters, right?
Yes, please. Thank you. What's up, guys? Hi, NDR. All right. We're in a bit of a pickle. Unfortunately, we gotta tune in. In a bit of a bad spot. I tell you guys about it. Ask for your advice. Don't know what to do. No makeup. Makeup like. Hi, Seacrest. We're in a bit of a bad spot currently. It's tricky. So, what's up with the vibe? Not sure. So, yeah, it's not a big deal, Bodhi, but so basically what happened is we got out of the hotel room and we walked over to the rental spot, the Hertz. And there's a weird problem where apparently in order to rent a car, you have to get you have to have a credit card with a major credit card company to be able to order same day, to rent same day. So we took the option of what you can do instead of that, which is you can make a reservation. You can rent 24 hours later after you make a reservation if you have a debit card only. But the catch is, if you have debit card only, you have to put down, and then they have to check your credit, even if you put the debit card down. So basically, we made a reservation. Thank you. Thank you very much.
Be right back to take you over, okay?
Thank you.
We'll probably need a minute.
Yeah.
Yep. Does this go on the outside?
Yeah. So the vibe is still at that repair shop. So basically what happened, so what we did was we made a reservation for 1 p.m. tomorrow. And what we're going to have to do is we're going to have to go back to the Hertz, put the $500 down, and when my dad taps his debit card, they're going to check his credit at that point. And if it's go ahead, then we can rent the car. If it's no, then we can't rent a car. So we don't know until tomorrow afternoon if we can rent a car. We did make the reservation. So
we'd be spending a whole night here.
We'd be spending another night here, which we can
just to see if
we can rent a car. We don't even know.
And it's honestly pretty doubtful.
Yeah. What's his credit score? Not high. Audio
Can't
and
be good.
image is desynced big time. All right. And the whole reason we were going to get a rental car is because we wanted to get the stuff from the Vibe. Otherwise, we would take a bus back, but we can't really take a bus back because we've got all this stuff in the Vibe.
Well, we could put it in boxes and ship it.
We could put it in boxes and ship it, yeah.
Oh, anyway, I don't know. I never thought of these things when you're like yeah, I've always had credit cards. I've had credit cards since when I was just about to graduate high school. Build up your credit score. Credit cards also, if you have American Express or some traveling based credit card, they have a lot of features like traveler's insurance, you know. So if you don't need to you can get, you know, your auto insurance from your credit card company to cover any incidentals that will happen while you're renting a car. Lots of stuff that I used, you know, once I turned 25. So you build up your credit score from 18 whatever, 25, you get to rent cars, travel, and it's like, bruh, yeah, I never thought of the fact that, like, what if you didn't have a credit card and you're taking the responsibility of renting a car by yourself? I didn't even think of that fact until this happened to the Thorpes. So when you're a brokey and you have no credit, you have no access to credit cards, like, all this stuff starts happening to you, huh? Interesting. Didn't even know that. Fascinating stuff when you live at the bottom of society. Now, they got saved, okay? They got saved by Jeremy. Jeremy showed up. So let's continue on. Let's continue on the storyline here. So I'm catching you up to the story thus far.
Late night, but I had sort of an erratic nap. So we're gonna go knock on Jeremy's door and see if he's awake. What do you call? Anything could happen. Good evening, Jer Bear. Yeah. You about to go to sleep?
Yeah.
Well, too bad. I'm bored.
Alright, well, what do you got going on?
Let's go have a smoke. I want to interview you about your John Galt experience. We'll see what happens.
Alright, we'll check out chat. What's going on in chat?
Let's see. Damien's gifted a sub. Thank you, Dame. Thank you for gifting a sub. Jeremy, the alcoholic loser. Well, I think you are sober again, no?
Yeah, I'm an alcoholic. I just like getting drunk every once in a while.
Yeah. It's pretty rough, the New Year's thing.
Yeah, people do fun.
Guys, yeah, Jeremy reached out of nowhere and said, let me come pick you guys up in Jersey, which was very nice, because otherwise we were gonna definitely be stranded. No credit card, can't get a rental car, can't get a U-Haul, can't take the public transportation back. The two people who reframed the most, brought together by mutual desperation. That's crazy, Stephen. That is absolutely insane to say. So what happened with Galt? I saw a text from him to you. Apparently you fell down the stairs or something.
No,
This is the hospital.
I was like stumbling around, and then I had got
You
too
did
drunk.
go to the hospital, right?
Yeah, I got too
For
drunk.
what? Blood poisoning? Alcohol?
No, dehydration and some other shit.
How long was the... No, Jeremy texted my dad out of the blue because I had him blocked. Sorry about that. And
I deserved it.
and said, let me come pick you guys up in Jersey. So, Grace, you wished death to him on New Year's Eve. Well, spirits were high. There's a lot of drinking.
I was being a weirdo asshole. I get it.
Let's find a kitchen so I can scramble you 500 eggs.
Ava, what's the angle here? Being nice to him, is she trying to set up with Courtney again? You know what?
Yeah, I gotta
Actually,
meet Courtney. That's
you
right.
should meet her.
Yeah, I should.
I honestly have always...
So, you know, I don't know what to say about this stuff. It's just like, bruh. Yeah, bruh. But We'll continue on. We'll continue on, and we'll cover like the stand-up thing. We got the stand-up thing, but this was the last job Jeremy did for John Galt. Okay, so let me pull that up for you. Let me pull that up for you. But yeah, thanks, Dalmatian. You like the whole background music stuff? I spent a lot of time finding background music, you know. A lot of work on here. So this was the last task he did.
That's what I'm doing. Yeah, I'm good too. I'm already on step like 4. So the thing is just reaching this valve here, or this nut. I might need a different tool. I might need a different tool. It doesn't give you like any room to rotate. I get like a socket wrench. Okay, from the other angle maybe. Yeah, I'll show you. Yep, I think so. See that valve up there? What do you say, OPC? That's a hard fucker to get at, dude. I got the wrong tool, dude. I'm not gonna hit it with that tool. Most toilets don't have that edge right there. Usually you can just hit it right from the side, but this one has like a fencing to it. You want to call in? Alright. Yeah, this one has like a wall to the side. So I have to go get another tool. There you go, PC. Not to mention I got this like left-handed. But yeah, no, this toilet got an edge to it.
So OPC calls in. All right, there you go. OPC calls in. OPC loves fixing toilets, as you know.
Hey boss, what's good?
How you doing, man?
Have you got the kit, the replacement kit?
Yeah.
I think there's a tool in there. There should be.
Really?
I think it's like a plastic socket wrench.
No way. You're a lifesaver. Well, let me check it out. I hope you're right, dude, because otherwise I gotta go through another toolbox and we'll see.
Yeah, it's been a little while since I've done one of those kits, but I think so.
Okay.
So how are you liking this job?
I like it. It's cool.
Yeah, you gonna stick around, or is it something you're just like passing through?
I want to stick around because it's, you know,
What about the Europe? Yeah, that's what I was wondering. What about the Euro? Is that still in the works?
Europe, but that's not for a few months.
Okay, so you're not talking about being there for years then? This is just like a temporary, like make some money and then head over to Europe.
Looking at how things go, Europe would only be temporary, obviously. Is that what you're talking about? That's not it.
Nope, no, that's the that holds the hose into that. All right, maybe I got the deluxe kit. I might have gotten the deluxe kit. I'm not sure.
No, I got no excited, dude. There's no tool in here.
I'm sorry.
Go back into. What do you think I should do?
I think you should take the vice grips, just smash the pipe. Well, I don't know. What else do you have for tools? What other tools do you have in your vicinity?
Well, I have to go back to my place across the street.
Okay,
Here, let me show you again. See how there's a wall to the side of it?
Yeah, that's why they give you. It's like a deep set socket. Yeah, you can't get in there with a wrench or something because of the walls in the way. That's why it's a tall socket that they give you. Yeah. But if you just like you're gonna destroy that one. That's why I think if you just take the vice grips, tighten them up, break the pipe away, grab a hold of the nut, and twist it off, just throw it all in the trash.
Yeah, 'cause it comes with a new one, and it's a plastic pipe, right?
Yeah, there's no reason to save any of that. It's just it should be able to break with the vice grips.
Right. Left-handed. I gotta put the phone down. Wait.
Yep.
What if I break it from the top?
It doesn't matter. Yeah, just get it out of there. Yeah, just smash it, drill it, do whatever you got to do. Just get it out of the tank.
Yeah.
And if you can bite it up top and turn it left, the nut might stay put on the bottom of the tank, and you should be able to twist it out that way too.
Let's see. That's not breaking.
So is this the one that was cracked? The guy said it was cracked in the bowl?
Nah. Yeah, I might need a deep socket wrench for this.
Yeah. So the other thinker guy is that nut underneath has like, it's sort of like a wing nut, but it's got like 6 different nuts. If you could grab one of those with a vice grip and give it a twist, it might come off too.
Well, I think I got something here. Did I get it? I got it. Yeah.
Nice. Nice. All right, I'll go down. If you have any more trouble, I'll keep watching.
Yeah, sounds good.
Good luck to you, sir.
Thank you, sir.
Got it.
Yeah. Oh. It may be impossible, but we're good. All right. Install this.
All right. Yes, so we are done with that. Actually, that wasn't John Galt's place. He actually got he met the neighbor, and the neighbor has a bum leg, so he can't do certain tasks anymore. And so he enlisted Jeremy to do that for him or something. So, but that essentially was the last thing Jeremy did in the John Galt DC arc, okay, before going back to the Thorpes. Now, Eric W says, was OPC the Galt mole, or did I mishear you regarding the screenshot links? Well, if you watch Celebrity Sunday, the last Ruby stream on Sunday, OPC went on panel and admitted that. So yeah, he was my number one suspect, but I didn't reveal that, okay? But yeah, that was my number one suspect. So he apparently gave those screenshots to Ben, and from Ben it went to Grace, and from Grace it went to all over the Discords, and finally Ruby's Discord, where you see the stream where she went off on the whole stuff. I don't know. You guys can watch that yourself. Go to Ruby SpaceX channel. Ruby basically essentially made this song about Jeremy right after that.
Throw Jeremy away. Jungle don't want him to stay. He looks bad when he shaves. He's a little freak. He's probably going out and digging up graves. Obsessed with Grace, obsessed with Grace. It's Jeremy's face. It's Jeremy's face. It's never ending. He just cannot find his face. Jeremy's face. Jeremy's face. He's so lost, he's so just wounded and misunderstood anyways. Get rid of him. get rid of him. Called dibs on Jim, but get rid of him. I always wanted to be friendly, actually. I was so trying to be friendly. He's the one who said with so much, he deserves to lay ribbing, but he's probably gonna cry about that for ages. They're gonna say I'm a bully, but it's reactive bullying. Doesn't justify it, but it might make you kind of understand. You want to try it.
Anyhow, yeah, okay, that yeah, let's get back to the whole where we're at right now here.
Would be good friends because they're very similar personalities, sort of.
Say melancholic.
Melancholic.
Don't say it.
You know, like
I'm just
artistic.
That is a bad idea. She is already taken.
I'm not saying for sex. I'm just saying as friends. It might be a nice break from the.
Jeremy will eat her hairy snatch.
Okay, guys.
Do it. What do you think? Are these capris? I was wearing these in Chicago.
I was wondering what. I thought you just had like joggers rolled up.
They are kind of rolled up joggers. They're comfy.
Grace gives the same vibe I do when I would hang out with an unattractive male friend that I knew had a crush on me.
I am
I mean, the TTS is insane out here, man. They have everyone's voice. They even have my voice on there. It's like fucking shit. Anyhow, let's skip to the McDonald's part, since this is still a finance show.
A bunch of Oreo cookies.
That is ironic, yeah.
I went to Black People Poster once. Your car declined.
I eat Oreos in the backseat of my car. It's about as why the Oreos are wet.
Reverse.
That guy just eats eggs all day.
Let me try it again. That's impossible.
Grace, we'll pay. We'll pay.
No. That's impossible.
Right here. Grace.
Give him the cash app card. If you want.
Oh, Jeremy, you're not paying. Grace,
I got $200 on this card.
Grace, you're such an asshole.
I got him the hotel room.
Nothing.
All right, give me the card. Okay, all right. Hold on. Give me the card. All right. Hold on.
That is embarrassing.
That's okay. That's okay. Okay.
You're going deep into the plastic.
Here you go. Oh, stalled out. Nothing's going right for Jer Bear right now.
I think he's trolling me. I think that guy's trolling me.
It'll turn around, buddy.
I know.
Man, how could this happen? It's impossible. That is impossible.
Just check my account. They are humiliating.
Overdrafting to buy a Happy Meal.
I am a severe
bag addiction. You take payment in Oreo cookies.
Do you have Klarna?
Just stay home.
No, they're still in the plastic wrap. I'm telling you, man.
Grace are
one roll of
impressed by my $200 account balance.
Coins.
Tell me I can't
Everyone
get
in
a
this car
McDouble
is
for
broke.
that.
Yeah, let's see. I got money in the account right there. Put it on through.
I see 140. All right, I see 148.
Grace thought I was.
That is impossible.
Just check my account. They are humiliating.
Overdrafting to buy a Happy Meal.
I am a severe
bag addiction. If you take payment in Oreo cookies.
Do you have Klarna?
Just stay home.
No, they're still in the plastic wrap. I'm telling you, man.
Grace are
one roll of
impressed by my $200 account balance.
Coins.
Tell me I can't
Everyone
get a
in this car
McDouble
is
for
broke.
that.
Yeah, let's see. I got money in the account right there. Put it on through.
I see 140.
Yeah.
All right, I see 148.
All right, you see that?
Grace thought I was.
148.70 something.
No, guys, he's got.
Just stay home.
All right.
No, they're still in the plastic wrap. I'm telling you, man.
That's all you got right now.
One roll of these.
Coins.
Tell me I can't
Everyone
get
in
a
this car
McDouble
is
for
broke.
that.
Yeah, let's see. I got money in the account right there. Put it on through.
I see 140.
Yeah.
All right, I see 140.
All right, 148.74. Right. All right. Screenshot that. That's all we got from the John Galt collab. You know, you gotta monetize your audience, And this is one of the things when you play this game, it's like you really got to milk them for all they got. You got to milk them for all they got. And doing IRL stuff. And, you know, Jeremy was sleeping in his car. So now he's doing hotels. It's cold, right? It's pretty damn cold where he's at right now. I mean, that was the benefit of staying with John Galt. You didn't have to pay for the place. But now you're back on the road. You got to pay for the place. So the interesting thing about today is, where will Jeremy stay when he drives them back to Rhode Island? Will he stay at their place or not? Or will he stay at in the RV if he doesn't want to stay at their place? I don't know. Gonna be interesting. We have more things to go. He's begging for hotel donos on his stream right now. Bruh, you know that though. Yeah, we are. Yeah, we are at the point. Okay, he's begging. See, this is why you gotta listen to these streams, man. You gotta listen to these streams. You have a lot of stuff to get into. Now we are about to get to 50 minutes until the second hour. I covered a lot of stuff already right now. We'll get into if we got time, we can get into the stand-up comedy stuff that he did. He got a $100 dono from Distinction. I don't know if he got any cash apps from anybody else, but yeah, things are rough. All right. Okay, so let's go on into China. Let's see the China stuff. Let's go on into the China stuff. All right, we're done with the Tesla stuff. Okay. All right, guys, hold on there. Switching off the battery power here. Okay. All right, kicking up the AC. I mean, it's tough out here in California, you know. You don't really get nice cold weather. Once the sun comes out and it gets past 10 o'clock, it starts heating up pretty fast. Yeah, so nice. But here we go. We're going to talk about China's magical credit machine. And this is an old article in 2023. So we got to go over that a little bit. We have to see if we want to invest in China. And also this will affect oil. A lot of the oil pricing will be affected by how much China consumes energy, and Europe as well. I mean, the European economy is also another thing. So if we got time after some of these Chinese articles, we can get into that. So the end of China's magical credit machine, written in January of 2023, China's economic growth will slow significantly over the next decade. One of the most important drivers of this slowdown is the unwinding of an unprecedented credit bubble. China's financial system simply won't be able to generate the same levels of credit growth that it has in previous years. This means that Beijing will have far less control over the direction of its economy than it has in the past. Growth in total societal financing, a measure of funds provided by the financial system to the real economy, is at all-time lows, and other credit metrics are decelerating. Over the next decade, we expect rates of credit growth in China to fall below 10%, with knock-on effects for investment growth and the broader economy. Credit growth is under pressure for three main reasons. Credit demand is slowing sharply because households and corporates have reined in their expectations for economic growth. Lenders are becoming more cautious in response to rising credit risk in several asset classes as implicit government guarantees for borrowers lose credibility. This is particularly apparent in lending to the property sector. Credit supply is constrained by the massive size of China's financial system and the difficulties of maintaining high rates of credit growth while complying with regulations related to capital requirements and loan loss provisions. Okay, so I'm not going to read much of this elsewhere, but you can look at this graph, I guess. I think this weekend we'll have some more the Bank of China information, but I don't think anything will change. They're going to be conservative. Already last year, they already said. So I've read those articles for you already. They're going to be pretty conservative here. Anything else? Rising defaults, that's true. Let's see, capital and regulatory constraints limit credit supply. So there's a lot of things they can't really do at this moment because they don't want to accelerate the bubble anymore. So let's look at the conclusion here. The end of China's great ball of money. There are several implications for China's economy, from the broader slowdown to overall credit growth. First, Beijing is losing control over a critical policy tool which gave it outsized influence over the financial system. If Beijing can no longer provide the guarantees that ensured lending was safe, then financial institutions must protect themselves and reduce their exposure. Lending will become increasingly concentrated in a group of state-protected borrowers and quasi-financial fiscal institutions at the local government level, those that still feature more explicit government guarantees. Beijing's capacity to encourage private sector investment will be weaker, as state-directed credit will crowd out private borrowing. Second, this has major implications for asset markets as well. For years, the large expansion in credit had created a great ball of money. Surplus liquidity sought returns within China's economy, flowing into equities, then to properties, then to commodities, and back again. The slowdown in credit growth reduces surplus liquidity in the financial system that could fund speculative investments. So that's the key point, right? And it's not just Chinese stocks and whatever. Actually, if you plot it out, every time China had a huge spike in credit, it flowed through all across the world. It traveled around the globe. So that money flows everywhere. Since they're not going to do that anymore, which is what they said in the last major meeting in a National Congress, when they had the meeting on the economics of China. Yeah, I don't think this is going to happen. This is what happened, okay? So this article has proven out correctly, and we are seeing that. So do you want to buy oil? That's the question. And we have to look at Europe for this answer, I think, for now. That's kind of the problem. That's kind of the problem. I wouldn't really trust Europe to help anything, because this was something that happened to Amazon recently. You can read this article. Amazon to appeal against Italian antitrust fine, even after it was cut. So this was January 14th. U.S. e-commerce giant Amazon said on Wednesday it would appeal against a decision by an Italian court that reduced a fine imposed by the country's antitrust regulator, as it believes it should not be charged at all. On Monday, Italy's antitrust authority said it had reduced to 752.4 million euros, so that's $876.3 million, a 1.13 billion euro fine it imposed on Amazon in 2021 for abusing its dominant position, restricting competition in e-commerce logistics services in Italy. So, it's funny how, Trump does tariffs to protect U.S. interests, local companies. And then this is how Europe plays, where they just do fines. And they've been doing it for quite a while. Actually, I have this chart right here for you. Let me get to this. If you look at if you look at how Europe plays, it's like this. The EU collects more from US tech fines than European tech taxes. So if you look at the right, these are the taxation revenues from European tech companies. And then compare it with like the fines they impose on US tech companies for being quote unquote antitrust monopolies, right? Okay. So these governments get a ton more money from fining the top tech companies in the US. And there's tons of these little ass tech companies in the EU that they don't promote, that don't try to scale up to the level as the US, right? Now, if you look at China, China has a love-hate relationship with tech companies, right? You look at Alibaba, Jack Ma, like they want them to be strong, but they don't want them to be too strong, too influential in government. If you look at the US, like if you say like, well, Google is dominant, Apple is dominant, you know, these guys control a lot of information. Amazon with Amazon Web Services also dominant. They play a large game in information flows. So how governments influence people, right? Propaganda. You might say that maybe they're just part of the CIA. I don't know, whatever. NSA, all those alphabet agencies. But yeah, this is something to consider. And I have an article just on that. Let's go to this one. I think I put this in the description. Hopefully I did. Yeah, it's by ABZ Global. Okay, so that's the 5th citation I've had on my description. So let's go to it. So here we go. Why Europe is behind the USA and China in big tech companies and what could change. This is written in January 8th. All right, so I guess this is a generated thumbnail. So why Europe is behind tech to USA and China? Europe isn't bad at tech. It produces world-class engineers, research, and serious companies. But when people say Europe is behind, they usually mean this. Europe creates fewer global-scale tech giants, the kind that dominate cloud, consumer platforms, chips, AI, infrastructure, and venture-backed growth at massive scale. So why does the USA keep producing Apple, Microsoft, Google, Nvidia level outcomes? China produces Tencent, Alibaba, ByteDance style scale. And Europe produces fewer trillion-dollar tech companies. Let's break it down. All right. So look at this. Look at this. The money problem. Europe funds startups, but the US funds scale. Early stage innovation exists everywhere. The difference shows up when a company needs to grow from 10 million to 100 million to 1 billion revenue and raise huge rounds to get there. In quarter 2 of 2025, the US accounted for nearly 70% of global VC venture capital investment, while Europe was around 14.6 billion in VC investment that quarter. That gap matters because the winner takes most markets. Cloud, AI, market spaces, social often require aggressive scaling capital before profitability. Europe has capital, but it's historically been more conservative and more bank-centered, which leads to the next point. Europe is still too bank-based, and risk capital is harder to mobilize. The EU has high savings, but the financial system doesn't always route that money into high risk, high upside innovation. The OECD explicitly points to underdeveloped capital markets and that the largely bank-based system doesn't channel savings into young, innovative firms effectively. Banks are great for mortgages and stable businesses. They are not designed to fund burn cash now, dominator cash tech scaling. Okay, there you go. Fragmentation, one continent, many markets, and many sets of rules. The US is one huge market with mostly one company law system, one main language, and one default scaling path. Europe has the EU single market, but in practice, scaling still hits friction. Different tax systems, different labor rules, different consumer laws, different regulators and compliance expectations, language and cultural fragmentation. Even in 2026, the European Commission is discussing a 28th regime idea, an optional pan-EU legal framework to reduce cross-border friction, because this fragmentation is a known scaling blocker. And the IMF flags fragmented regulation as one of the key constraints holding back the EU scale-ups. Exits are weaker, fewer big IPO moments, and less liquidity. A startup ecosystem accelerates when founders and employees can exit, then recycle that money into the next generation. Europe's public markets have improved in cycles, but exits are still structurally harder compared to the US. Example, in 2025, across Europe, IPO proceeds were about $17.3 billion US dollars, with fewer deals than 2024. And many companies stayed private longer due to private market dynamics. Also, there's ongoing pressure for major European companies to shift primary listings to the US because of deeper liquidity and valuations. Yes, you see a lot of European stocks get listed on the US because the US stock market is the best casino in the world. You can just buy anything you want out here. Reuters notes this trend and even estimates roughly $1 trillion of European companies could be candidates based on revenue exposure. So, yeah, you can read more of this stuff yourself. Yeah, I'll read number 8 right now here. China's different model, scale plus state alignment plus manufacturing depth. China's advantage isn't startup culture like Silicon Valley. It's more like massive domestic market, aggressive competition, fast iteration cycles, strong manufacturing supply chains, strategic national focus in key sectors. That's why China can create enormous tech platforms and also move quickly in hardware adjacent tech. Europe tends to be slower to coordinate at that scale across 27 plus national priorities. No, that's changing in areas like semiconductors, defense, and energy security. Yes, that's why some of the best performing stocks in the last couple years since the Ukraine war were European defense companies. We discussed some of those several streams ago. So I'm going to have to clip out certain parts of my videos, make them into new videos, and then upload them separately, okay, or premiere them or something like that for you guys. But definitely, we'll have more structured shows this year. That's what I was trying to do last year, attempting to go into last year, but then April happened, and then it's like, well, April, you got the nice bottom, and then you go into May with the nice, push up with the breath thrust. It's like you just turn off your brain. You just buy semiconductors. There's nothing else you could do, really. So there's times in the markets where you have to think deep, and there are times in the market where you don't have to think at all. And from April up until now was the moment you didn't need to think much in the market. Now we're moving into a different era where we have to consider what are the dynamics of Europe, what are the dynamics of China, what are the dynamics of the big tech companies with AI. We know there's a shift moving into next year. We're going to have a shift. We got to get into small caps, biotechs, things like that. Those will get the best returns because they'll suck up like a sponge most of the money that's pouring out of the Federal Reserve and also government funding as well. A lot of the big tech corporations already have enough cash. They gave you a lot of returns from April, okay? So there's not much more it can grow. So as the stock market shifts around, we want to get the best returns. The best returns are probably not going to be in those areas. So in the weekend, we're going to go over a list of stocks, tons of stocks. where I've highlighted some things. We'll go over China as well. So I don't think I can get it into it, fit it into this. We already have 2 hours. So we'll continue on. I don't know if I can get to mortgages. Mortgages are going to be interesting. Okay. That's going to be interesting. I might have to hold that one off till later. And then we're going to talk about the yen too. And then I have to review the whole dollar milkshake theory with you guys. I wanted to do 2 streams ago, but there just wasn't no time for it. So anyhow. Okay, so let's continue on. Let's continue on the journey. So let's look at where we stand on the Ruby thing. So if you guys know, Ruby had an event happen to her. Okay, there was an event. Let me get that. Okay. So there was a battle. There was a battle of New Haven. I think it was like this, right? Oh man, I think I played the wrong thing. Holy shit! Sorry guys, I played the wrong video. I was supposed to play this one. Oh, my bad.
Reservation.
This is where the roopster went.
Okay.
Oh, there she is. There she is. Look, there she is.
Oh my god. That's her mom.
That's her mom.
They're watching this.
The roopster walks down with its enabler.
Oh, they're coming in.
Oh.
Okay, well, let's sit down over here.
Hey, Ruby. Hi. How are you guys doing? We just wanted to check it out. It looked like a nice place.
Oh, really?
Yeah? Don't come near me.
Whoa, whoa! Aaron,
Stop.
Fucking with me.
Hey, stop grabbing it.
Aaron,
Aaron,
get off of her.
Get off me! Oh my god.
Oh, you're not so tough
Hey,
now.
stop. Stop grabbing it. Hey, stop.
Get off! Let go of me! Let go of me!
Walk away.
I'm calling the cops! I'm calling the cops! You know that! Stop! Oh! Get off of him! Get off of him! Get off of him! Get off of him! Get off! Go away, run! Call the cops! Call the cops! This woman just attacked me on video. She's in that restaurant atelier. She grabbed me. She grabbed my friend. She hit us. Red hair, please. She held me like crazy. Please. I have it on camera. Oh my God. Her. There. Right there. She's gonna come back, please. She's coming. She's going to attack us again. I'm getting in the car. pull up the video. Pull up the video.
All right. Hold up. So let's look at where we at in Twitter land with this stuff here. So 7 months ago, a possible IDF insider, Rico Suave 666, predicted the exact day Israel would strike Iran and won $154,000. So they did this with the Polymarket crypto gambling website where you can bet on anything. He's now back on Polymarket and started buying a massive position in another Israel strike on Iran by January 31st. Now, so far, Trump has kind of like said, ooh, well, you know, if you stop killing people in Iran, okay, Ayatollah Khomeini, we won't strike you. But that doesn't say Israel won't strike them. So, and we still got a lot of days until the 31st, right? Now, here's the other thing. What other stuff we got here? We got Greenland. What's the bet on Greenland, right? An account on Polymarket has bet 66,000 that Trump will acquire Greenland. Okay. Oh, all right. So this was January 15th. This is a picture of Nancy Pelosi. But yeah, like I don't know. We're gonna get Greenland, or we're gonna like Israel's gonna attack Iran instead of the U.S. Blah blah blah. So you know what? Hey guys, we got a lot of stuff to cover. You know, we still got a lot of stuff to cover with this whole thing. That's some lesbian lovemaking. Yeah, sure. So yeah, just go to Polymarket. You know, Polymarket is so interesting. I love that whole place right now. Let me see if we got something else from Polymarket. Who is going to be Trump's Fed chair? Let me see what the update is on that. Kevin Warsh is still 60% to take it. Damn, man. Like, it's a huge boost. Kevin has used to be at 40, but it's dropped a lot. So whoever's betting it, you know, they're like, bro, I guess it changed. Yeah, it changed overnight, man. We got a 60% bet this Kevin Warsh. So if you want to know how the Fed is going to be in May, Kevin Warsh is the person you got to look at and figure out how their policies are going to be. All right. Perfect. Anyway, let's continue on. Let's do the mortgages. Let's do mortgages, all right? Let's do mortgages. Let's change up the music here. Close that up. Yeah, that's important, but I think that's enough. Yeah, I think it's enough for now. We're definitely going to review some Chinese stocks that I'm eyeing. If China can successfully boot up their economy this year, finally, I'll look at China again. Ackman. So this is Bill Ackman, right? Yeah, Bill Ackman, the guy who cried during COVID. You know, he cried on CNBC right at the bottom of the market during COVID. So hilarious, this guy. Ackman mortgage plan sparks debate over cost of prepayment freedom. Billionaire hedge fund manager Bill Ackman's call for Fannie Mae and Freddie Mac. So these are penny stocks right now. They've 10x since Bill Ackman started playing around with it. So these are still in the early stages. Okay, these stocks right now penny stocks could become big multi-baggers later on. So the hedge fund manager, Bill Ackman, to offer new government-backed mortgages with prepayment penalties, put a spotlight on how much United States borrowers have paid for the right to refinance at will. The Pershing Square chief investor urged President Donald Trump and Treasury Secretary Scott Bessent to introduce non-prepayable 30-year loans through the government-sponsored enterprises, GSEs, arguing that investors in mortgage-backed securities demand extra yield to compensate for today's no-penalty structure. Ackman's trade-off, flexibility versus price. One of the unique features of U.S. conventional mortgages is that you can pay all your mortgages off early. No penalty. Banks wouldn't care. You can refinance. You can do all kinds of stuff with loans. This is why the U.S. real estate market is quite unique compared to like some place like Canada and other places. That's why the housing dynamics are a lot different. While this feature is attractive for homeowners, it comes at a significant cost, as buyers of mortgage-backed securities, MBS, require a significant increase in spread to compensate them for giving the borrower the option to prepay at any time. He said an MBS investor has estimated that shifting to a structure with penalties could cut the rates on a standard 30-year Fannie or Freddie loan by about 65 basis points. So that's 0.65% off your interest rate. Giving borrowers a choice to obtain a 30-year prepayable mortgage today is 6% or at 5.35% rate, but with the obligation to pay a prepayment penalty if he or she refinances in the future. So you cut off that 6 and you push it down to 5.35% at today's rates. Ackman added that locking in the 65 basis point savings upfront over the life of the mortgage may be the difference between the borrower being able to afford the home and not being able to. He also floated variants of 5 or 10-year lockout periods and suggested making the loans portable so that if the home is sold, the new borrower could assume the loan and no pre-made penalty could be owed on a sale. Okay, this is a big change, right? These are big changes. So Ackman's proposal followed Trump's directive for Fannie and Freddie to purchase $200 billion of mortgage-backed securities, a move that helped pull average 30-year rates below 6% for the first time since 2022. Mortgage spreads in the secondary market have already tightened by about 50 basis points in recent months, including roughly 20 basis points on the day the plan was announced, as GSE board buying pushed MBS yields closer to treasuries. Industry lawyers and policy specialists have earlier warned that any steep step seen as weakening the implicit government backstop for Fannie and Freddie risk forcing spreads wider and pushing mortgages rates higher. Ackman's plan, by contrast, keeps the GSE at the center of the market while shifting more interest rate-backed risk to borrowers through penalties. Supporters of the idea argued that removing borrowers' fee-free option to refinance could compress MBS spreads by as much as 100 basis points over time, potentially amplifying the rate savings that Ackman highlighted. Critics pointed to the risk of trapping households in higher rate loans during future downturns or life changes, despite the appeal of lower upfront pricing. Yeah, it's a give and take. There are pros and cons to this stuff, depending on where you are or what your position is in the loan making or receiving business and where you are at life. I have no idea. And I guess that also depends on the demographics, right? If there's a lot of boomers, this is a problem. If you have a lot of millennials looking to buy houses, this is probably more of a benefit. So since we know there's a lot of boomers dying off, this type of policy probably will be easier to get through Congress or easier to pass through. I don't know which mechanism this will have to go, if Trump can do an executive order on this shit or not. Bill Ackman has his own reasons to do this. The reason being is like he has a lot of shares in Freddie and Fannie Mae, so that's why he wants to push this type of policy. Anyway, let's look at another mortgage article here. All right, let's see what we got here. So this one, talking about Ackman here. Ackman mortgage plan sparks debate over cost of prepayment freedom. Okay. And let's look at this. I think this is from a perspective of the mortgage. What is the MPA? MPA is the Mortgage Professionals of America. So I guess this will be the opinion of the people selling mortgages. Billionaire hedge fund manager Bill Ackman's call for Fannie Mae and Freddie Mac to offer new government-backed mortgages with prepayment penalties put a spotlight on how much United States borrowers have paid for the right to refinance at will. So I'm going to skip down here. One of the unique features of U.S. conventional mortgages is that they are prepayable at any time without penalty. We know that. Blah, blah, blah. That's a Twitter post. Okay, we know that. We read that. All right. And let's see. Trump bond buying move already pushed rates lower. That's what we read as well. Okay. Anything else? Oh, man. So this is the same thing. This is just a copy paste of the other one. So let me see. Let me see. So did I already read this already? Okay. Yeah, I'm sorry. I already read that, man. I was going for this link here. I already read that. Come on. So this is another article. This is from Institutional Investor. This is the one. Okay. Well, Ackman finally cashed in on his Fannie Mae and Freddie Mac lottery ticket. Pershing Square's investment in the two mortgage giants could be worth as much as $10 billion. So that's why I'm saying, like, you want to get into these penny stocks, Fannie Mae and Freddie Mac. So we'll go look into that next week or this weekend. Okay, I have a huge list of stocks to go over. These are two of them. So these might be the investments you want to do when you cash out your semiconductor stocks as we head into earnings season's hurricane. So the eye of the hurricane will be around the 27th through the 29th, okay, of this month. The two corporate giants that have been in the federal government's hands ever since the financial crisis. A lottery ticket in the drawer, but one that's enormously profitable. Could this be the year that Ackman cashes that lottery ticket, which according to some estimates could be worth as much as $10 billion? For perspective, that would be half the size of his entire hedge fund enterprise. Ackman is known for contrarian bets that can sometimes be big winners. These particular stocks are soaring at a time when the Trump administration has acknowledged it plans to sell a portion of the two government-sponsored enterprises in the public markets. They are also boosting the hedge fund in a volatile market. Pershing Square's publicly traded hedge fund is up 18.4% net at the end of August compared with the broader market's gain of 10.5%. And Fannie and Freddie accounted for almost half of those gains. Over the past year, Fannie's shares have risen almost 1,000%, and they're almost 300% this year alone. So that was a 10-bagger from last year. Yeah, that was a 10-bagger. As a result, Fannie Mae has become Pershing Square's most profitable holding of the year, and Freddie Mac is the third. According to a report to investors on August 19th, Fannie shares provided 6.1 gross percentage points of the fund's gross gain of more than 22% this year, while Freddie Mac accounted for 4.3 percentage points. Together, that comes to a total of 10.4 percentage points of the total gross performance. Recently, Bill Pute, who heads the Federal Housing Finance Agency that oversees Fannie Mae and Freddie Mac, said that the U.S. government was looking to sell around 5% of the two mortgage finances in a public offering. He also said he thought those two companies were worth between $500 billion to $700 billion to the U.S. government, which owns 80% of the shares. The rest is owned by investors traded on the over-the-counter market, the pink sheets. So these are penny stocks. Penny stocks you can buy and you can hold. Anyway, you can read the rest of this article on this website here. The link is in the description. Let me see if there's anything more interesting. Blah, 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 blah. I'll read this. After Ackman's endorsement of President Trump last summer, he told investors that the privatization of Fannie and Freddie would be the biggest deal of all times and negotiate, and we'll be delighted to help him if we can. Ackman has spoken about the possibility of the privatization of Fannie and Freddie under Trump several times over the past few years, but this is the closest his. Yeah, if you want to bet, all right. So that's it. That's it. We have that going on. Okay. Yeah, nothing else. Okay, let's see. And here we go for home builders. We got this article, and we'll round that out. So that's the end of talking. So we're switching off to mortgages to home building here. Trump administration takes aim at home builder stock buybacks. So this is kind of referenced in the last article. Housing finance chief Bill Pulte says home builders aren't doing enough to lower housing costs. For some in the Trump administration, buybacks have become a dirty word. In a recent interview with the Wall Street Journal, President Trump's Federal Housing Financial Agency Director Bill Pulte questioned repurchases made by home builders when discussing the administration's plan to lower housing costs. Pulte, the scion of a home building giant, said the industry has purposely kept prices higher, calling on it to help lower them and to build more homes. Okay, building more homes across the country. They're making, in some cases, more money than they've ever made, and they're buying back stocks like never before. It's something that we're studying, how much money they're spending on buybacks. He hinted at penalties for companies that didn't help the administration's push, adding that support for the government-backed mortgage financing firms, Fannie Mae, Freddie Mac, shouldn't be used to fund buybacks at the expense of Americans who need to get in homes. Read between the lines on that one, said Pulte, who is the regulator of Fannie and Freddie and the chairman of both boards. Our preference is to use carrots, but sticks are on the table. His comments come just after President Trump targeted buybacks in the defense industry. Last week, the president ordered 2 new restrictions on stock buybacks at defense contractors, in addition to executive pay. An executive order said contractors were not permitted in any way, shape, or form to pay dividends or buy back stock until such time as they are able to produce a superior product on time and on budget. Defense contractors are currently issuing massive dividends to their shareholders and massive stock buybacks at the expense and detriment of investing in plants and equipment, Trump wrote in social media. This situation will no longer be allowed or tolerated. All right, so let's see. These policy initiatives are just two parts of the Trump's administration's nuanced, nimble, and multifaceted economic and national security agenda. Multiple stock market record highs and rising real wages for American workers prove that President Trump can unleash prosperity for both Main Street and Wall Street, just as he did in the first term, blah, 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 cracking down on buybacks in which companies can repurchase stock. Okay, nothing here. Okay, here's a more important thing. Biggest publicly traded home builders each touted their sizable buybacks in 2025. D.R. Horton repurchased $4.3 billion in stock that in the fiscal year. Lennar spent $1.7 billion. Pulte Group spent $900 million through its last 3 quarters. In recent months, Pulte has also criticized the use of buybacks in closed-door discussions with home builder executives, with the message that capital could instead be used to make homes more affordable. According to people familiar with the matter, home builders need to do the right thing by the American people if they're going to have access to our liquidity. All right, blah, blah, blah. A lot of boilerplate stuff here. And I'm guessing that, like, yeah, Pulte is related to the whole Pulte group thing too. So I don't know. I don't know if half this stuff is even matters. I think they talk the talk, but will they walk the walk is a whole nother matter. But it does give you some indication of where things are moving. So I did look at housing stocks again. I don't know which stream it was, but it was definitely several streams ago. I talked about it. So we'll have to look at those stocks as well as interest rates go down, mortgage rates go down, and housing building stocks are going to be pretty attractive. Okay. Now let's look at the labor market situation here. So that article talked about like real wages going up. So inflation adjusted wages. Now we looked at the whole Big Mac situation and we said like, well, what is the cost of a dollar compared to a Big Mac? If you repriced your minimum wage to a Big Mac, how does that look? You know, if you had to afford the same Big Mac as the boomers did back in the 50s or whatever, your minimum wage should be about what, $350. I think that's what that Russell Clark said in the previous article. So go back to that stream to hear me read the article. But here's another article from him. This was written in December 19th. If pro-labor theory is correct, now time to short. In a pro-labor work, time to short. In a pro-labor world, a pro-capital. So this is world. Man, this guy needs to like proofread his stuff, man. All right, in a pro-capital world, okay, so that means the capitalists are winning. In a pro-labor world, so that means the communist losers are winning. A steep yield curve is a time to short. Okay, all right. So inverted yield curve is a time to short. Steep yield curve is a time to short. All right, let's see. Whatever I commit to, I try to commit to until you reach a natural end. I learned how markets worked in the 1990s and 2000s, which is an era I would call the pro-capital era. And I committed this theory until 2021. When it became clear we were entering a new era, this was an era that was good for bonds as many of the free market policies were deflationary. Long-dated bond yields began falling from 1980 onwards and kept falling. In my view, the 2020 market marks the end of this era, and we are now entering the era of rising capital costs. Okay, one of the most effective signals to short in the 1980 to 2020 era was when the Fed funds rate was above the 10-year yield known as the inverted yield curve. Okay, so let's see here. So the Fed's fund rate. So this was above the 10-year yield. All right. So the effective funds rate is like the short-term rate. So that means the curve is inverted because the short-term has an interest rate higher than the longer-term dated bonds, like the 10-year yield. Okay, generally speaking, investors would tend to get bullish as the Fed cut rates and the yield curve steepened, as it is happening today. Below is the 30-year curve, so 2 years and the 30-year, which sent bearish signals in 1999 and 2007. All right, let's see. Okay, so this is when they went negative, right? This one went to 0. Didn't really go negative. All right, whatever. Okay, I'll take his word for it. I see things differently. For me, we were in a deflationary era, which is what the long bull market in bonds and ever-falling yields was telling us from 1980 to 2020. We are now in an era of rising yields for political reasons that I have expounded on at length on this website. And for me, most closely resembles the 1950s and 1960s and 1970s. In this era, the time to get bearish was not after the Fed raised rates, but after the Fed had cut rates. Why? Well, the long-term bonds are telling you interest rates are going higher, and the time of peak bullishness is when the Fed fund rate is too low compared to the long-term yields. In essence, the Fed and most other central banks have their forecasts on interest rates and inflation completely wrong, and the bond market is correct. At the old age of 51, I would take the bond market over the Fed forecast every day of the week and twice on Sunday. The time to get bearish is not when the Fed is too hawkish. The time to get bearish is when the Fed is too dovish. All right, let's see. I prefer looking at the 30-year Treasury, as it is far less influenced by the Fed. 2022 was the last big drawdown year for equities. That was preceded by a heavy steepening of the curve. Okay, let's see. All right, let's see. Okay, now we're going negative again. Whenever I do anything, I like to commit to it, and it does seem like time to commit. I'm also encouraged by two other market signals. I guess another proofread error there. That's TWO, not TOO. Japanese 30-year bond yields at a new cycle high, and the Bank of Japan plans to raise rates. We discussed that briefly before, and we'll discuss it again. Well, the Fed is talking about cutting. Very odd. Also, gold has touched a new high versus the S&P 500. This tends to be a bearish signal. Okay. Finally, I've been doing this job for a long time. I think people are coming around to my way of thinking, but they won't really believe it until they see it. My job is to believe before seeing. I believe, and I have the short book in place. Now is the time for us all to see one place or another. My next few posts will be more thought pieces on blah, 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 blah. So this is a macro guy, okay? Macro people always have these big theories about when to short, when to long. The timing, however, is in question, right? Like I said, a lot of people are thinking 2026 is going to be a big crash year. I think we're going to delay that for 1 year, but I'm definitely going to take this into account. I will look at what he's saying, okay? So he is looking now at when the Fed is getting too dovish. All right, so that's what he said, right? That's what he said earlier. Here, let's see. Blah, 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 blah. Okay, I am going to look. The time to get bearish is not when the Fed is too hawkish. The time to be bearish is when the Fed is too dovish. Okay, so when the Fed's funds rate gets below the 10-year yield again, let's see. That's when I'm going to be looking at. All right, okay, I'll look. I'll pay attention. Let me pull up this graph. Let's see if I got memory. Let me close out all this stuff here. I don't think we need this right now. Free up some memory for my computer. So let's look at this plot here for the curve. Okay, let's see. Litecoin is up 2.78%. It's recovering. See, Bitcoin is still down 0.64%. Nothing interesting there. Yeah, nothing really interesting happened since I was yapping in the stream. Okay, how is the QQQ still at the same area? Okay, nothing interesting there. All right, no updates on the market really. I don't see nothing. Okay, let me get this and I'll pull it up for you guys. Okay, my yield curve chart. Okay, let's pull it up. So here I look at the 2-year yield and the 3-month yield. Okay, this I'm trying to replicate Jerome Powell's indicator. So Jerome Powell looks at the 2-year minus the front futures of the 3-year, though. So this is not exactly what he does. And I can't pull this up on this trading view, the futures 3-month yield, whatever. Good enough. And I'll just use these moving averages kind of like to show where I'm at. So every time we get to this point where we take like an EMA, 18-day EMA, and we cross over this 30. What is this? I think this is what did I set this as? Okay, yeah, a 30-day simple moving average. Okay, so every time this blue or aquamarine, whatever line gets above the yellow, I start paying attention a little bit. So we cross this around September. And I'm waiting for it to get above 0. If it gets above 0, I'll really pay attention. All right, I'll really start paying attention. Okay, but in general, every time this happens, some big event occurs. Last time was just before COVID. Another time was the Great Financial Crisis. We had that. So you go under 0, you start going back and forth here. We've been going back and forth quite a while, but we haven't gotten above 0. Once we get above 0, I'll take this more seriously, and we have some amount of days before like this will get into effect. I have my doubts that this will happen. All right, I don't think it will get above 0. If it does get above 0, okay, we have an issue. We really have an issue. But I think by the time we get our new Fed chief, this will start rolling back over, okay, and it will never get to 0 and above, and it will just roll back over, cross below the yellow line or whatever, and then I'll reset the counter again, and then we have to move this purple up. So in general, if this happens, if we are going above 0, then the crash will be imminent, and then there will be a crash this year. If it doesn't, then no, I'm delaying it till next year. I really think it's going to be delayed till next year. I don't think anything's going to happen this year. Don't panic. What I do think, however, is that if you already made a lot of profit already from April, you better consider selling something as we get closer and closer into earnings. Those earnings might not be good enough to keep the market happy for much longer. So that's something you got to consider. It's going to be a lot easier, I think, to sell, especially when you look at the way the NASDAQ is compared to the S&P. And if you go back to the beginning of this stream, I go over Tom Bowley's charts. That's what he sees, right? With his removal of the gap movements of the S&P, QQQ, XLY, XLP, IWM, all those ratios that he went over. So, yeah, that's it. I think that's all we gotta do. Nothing major. I'm not gonna get too stressed out or bent over about this right now. It's just chill time. Just chill, just chill. So let's see, Palantir's. Let's see how Palantir's doing. Time to short Palantir or not? Okay, so today is not a good day for Palantir. It's not going to end the week right for Palantir. Yeah. I guess this is all because of the ICE stuff, huh? If it's all news related, I don't think it matters then. Yeah. It's ripe. It's ripe to short, Palantir. Yeah, it's definitely ripe to short. I don't know if it's news related. I don't really care too much, but the chart doesn't look good at all. Yeah, I might have to move this up on the list of things to do. We might have to really short this sucker. All right, guys. So that's enough of that. Let's get back into the break. All right. What's up? I'm gonna free some memory. Let me double check everything. If you run StreamYards a little bit too long, you know, I gotta like excise all the memory out. Okay, good. Okay, all right. Clear up some memory, free up some memory there. Yeah, don't run StreamYards too long. You're gonna get fucked up. Okay. Yeah. I had to clear the memory, Thunder Chicken. I had to clear the memory. Yeah, StreamYards is a memory hog. Trust me. So I have to do all I can to make this thing run on my 8 gigabyte computer. I don't want to be paying for a laptop I don't need. I've been waiting for Intel to refresh their processors. Then I'll pay. I was thinking about buying it last Black Friday, but I don't feel like upgrading and then reinstalling software and figuring out passwords again. I'm pretty lazy. I'm so lazy, man. So if I don't need to, I won't do it. But yeah, I'll have to do it. StreamYards is going to take up more and more of my processing time. If you're going to do OBS, oh hell no. OBS, yeah, that sucks a lot of memory. Okay. All right, guys. Let me get this. I think I covered a lot of what I wanted to cover. A few things I haven't covered yet. Let's do one article, and then we're going to go back into our break here before we close out. So we'll have 3 hours on this show. I'm going to do some stand-up. I'm going to show some stand-up from Jeremy and Uncle Ben from last night. And let's see what you think. So this is a McClellan article, okay? And it does 80 lines. So that's advanced decline line. New highs, limits drawdowns. So what this means is that if we have a new all-time high, okay, in the advanced decline line. So I think this is NYSE, right? Yeah, NYSE. So New York Stock Exchange, all the advancers minus the decliner. So whichever stocks had an up day versus a down day, they subtract the two. You get your number every day, updated every day. So right now we're at a new high. So what we see, what he sees anyway. So if we have seen a new all-time high in the NYSE's daily advanced decline line, it confirms the new highs in the major indices, and that is a really good thing. Years ago, I undertook a study to see what it means to have a new high in the advanced decline line. In order to increase my sample size, I specified that it had to be just a new 3-year high instead of an all-time high. And then I looked at what the max drawdown was in the S&P 500 over the next 3 months after, the succeeding 3 months. The recent decade's results are shown in this week's lead chart. The short version is that if you see a new 80-line high, you have a pretty good assurance that the biggest drawdown you are likely to see over the next 3 months is limited to about 10%. The big caveat is that you can throw this rule out the window if the Federal Reserve or Congress puts a thumb on the scale. Okay, that's all you need to know. That's all you need to know. The fact is that don't expect the S&P 500 to drop more than 10% from a high right now. So we know there's a cap. Now, if the Fed moves in and protects the market in May, right, with the new Fed chief, then for sure, this thing probably won't get to like 20%, right? April, we got like 30%, close to 30% drawdown from the high. So I don't think it's going to be a big one. So at the start of the stream, I said, I don't think it's going to be a big one. There's going to be a correction, but it isn't going to be like, ooh, so delicious, right? Like April. That was delicious. This won't be as delicious. So what will be delicious is if you see something in the small caps that drops a lot. Small caps will be more sensitive. So a lot of people have been buying up a lot of small caps. Maybe those guys bought it at a bad price. They'll get flushed out really quick and we'll get something. So thank you, Polarity Gems, for becoming a YouTube member. Thanks a lot. Thanks to John. John's gonna like that. Thank you. So perfect. We won't have a nasty cut. We won't have a nasty drop. So I don't think it should be life-changing, but all right, my bad. Okay, so tax treatment in 1 year. That's what I was saying. I don't know how much you heard that. How much of that you heard? So it's the same stuff I said at the beginning, the first stream of the year. So the tax treatments, April, you gotta worry about that. People are also gonna sell off because they want to pay the tax man April as well. So there's gonna be a lot of things to take into account. Okay, so I'm gonna change up the music here, and so April is gonna be a big time to discuss those stuff as we get along. But for now, yeah, we're getting into March, February, March. Then we'll discuss more. But next week, I'm gonna have to look at how we're gonna decide which stocks we're gonna go into. Okay, yeah. That's it. I think that's it. Finish with that. Okay. So next articles up, or not articles, I mean videos up. We're gonna cover Jeremy's exercise into the unknown. So let's start off with this to wrap it out. So we round out the third hour. Yeah, so yeah, I'm sorry that it's taking too long to get over this stuff. I'm still kind of like getting over my quote-unquote sickness. I wasn't really sick though, but it's just really annoying. It stuffs up your nose after a while, and then you're like, what the fuck? It really pisses me off. At least I'm not like having leaky, dripping nose though. That's really annoying. Oh my god. Must be a rhinovirus of some sort. I don't know if it's COVID. I never got COVID though. I mean, if I did, I didn't get any of the symptoms. The whole loss of taste and weird hacking. I don't know. Whatever. Long COVID. I don't know if that stuff is even real. Anyhow, here we go. Let's start it off with this. Hold on. I gotta start it off with this. I think this is the way to start this off. Okay. I see you. Okay, I see it. All right.
He's very experienced. Yeah. Not on stage. He's never gone on stage. Wow. I'm ditching this fool.
What, say that again? She what?
When I took her to a comedy club, she was streaming and she would do this with the comedians, and we were front row, like holding her phone in their face.
Oh, yeah?
Oh, yeah, they don't want that. Yeah, exactly. And then she ran away when I was hanging out with the comedians outside after the show and needed to go get alcohol because she was too nervous.
Ava, is that true? Ava, how do you respond to Jeremy's allegations that you were too nervous around him and you had to go get booze? Thoughts?
Absolutely true.
Lies.
Not lies, Ava. Truth.
You guys didn't really have a lot of chemistry. Wait, who wants to go?
I'm not signed up yet.
You're a
He
comedian.
didn't sign up. Sorry, I'm repeating you. He's not my baby.
Jeremy.
Don't just ask for a stage. I don't like that. What, you never should have walked up there and started doing jokes?
Yeah.
That's not how it works, Avery.
Oh my god.
You call me a pussy?
A little bit. A little bit.
A little bit.
You're a comedian.
I got some jokes ready to go right there. Genocide.
Incest. Genocide. He's very experienced. He's very experienced. Yeah. Not on stage.
Like YouTube. Oh, bunch people like okay, yeah. So yeah.
Oh, so he's never gone on stage.
But it's also like
wow.
do it to a camera. Yeah, that's pretty funny or whatever. No, I know the difference.
Yeah. I'm ditching this fool. I'm ditching this fool. I'm ditching him. I'm so serious. That was the lamest, most disappointing experience of my
Free performance.
yeah. What a fucking loser. Making me look like an asshole because I said, Jeremy, go on stage. He wants to go. Scared to be on my 20 viewer live stream? 20 viewer live stream? Won't even go on stage. Claims to be a comedian. I thought he was actually a comedian. I thought this mofo was a comedian.
So that's the preview. That's the preview. We had this 1 year ago. I think this was a year ago, you know, or at least over a year ago. I don't know. Fuck. I can't remember the damn timelines now. But now we get to see. Now we get to see how he does in real life. This is what happened last night. This is Jeremy's stand-up.
Assurance of object permanence. Okay, the second one is Lauren Cockcroft. I probably didn't need to pronounce it that way. My apologies. Okay, the third person is Lizzie. Woo! The fourth person is Ryan Beck. Hell yeah. Woo! And the fifth person is Rose Khan. Woo! Sorry about that. Thank you, you're a nice person. All right, first up, you guys need to get excited because this person is digging out of the massive hole I've created for them. Please, let's get it going for Jeremy.
Right now you can tell.
That made. I immediately think, serial killer. I need to start killing people. That's not a good thing.
All right, hold up. How much did you guys get? Oh man. All right, let me roll that back. I don't know how much of that you got. It's like, yeah, I'm using some Wi-Fi right now. Okay, let me roll this back.
Is that person here? Okay. Next up,
So we just got out of the cold. Seattle. A little shaky, but I'm gonna get through this. So I spend too much time on the internet. Any of you guys spend too much time on the internet? Yeah, I like YouTube. YouTube is my place. That's where I love to hang out. Well, I'm learning things on YouTube that I don't think I should be learning, especially certain terms. There's one term called a simp. Does anybody know what a simp is? Woo! People, it essentially means that you're too nice. When you're dating somebody, you're too nice. And that's a bad thing. So I need to be more alpha. How can I be more alpha? On the internet, they say you need to up your body count. What does that mean? I immediately think, serial killer. I need to start killing people. That's not a good thing, right? I don't think so. My way of upping my body count would be to go to a bar, right? You go to a bar, you meet some women, you have a good time. That never works out for me. Ever. I always seem to be awkward. I always drink too much to overcompensate. Now, I'm still working on it, still trying to get out there, but I'm gonna go ahead and try to not be alpha. I'm gonna accept just being a simp. I think that's a good thing to be for me right now. Alright, so I'm from Seattle. Anybody else here from Seattle, from the West Coast? Woo! There we go. Where are you from? Exactly where are you from? California, I'm guessing.
Los Angeles.
Los Angeles, okay. I was born in San Bernardino. You been to San Bernardino?
I have.
What are your thoughts? A little sketchy, right? It's not LA, is it?
I like the county.
The county, okay. I don't know what that means. But, that's alright. The city is cool too, right? I'm sure it is. So this is a new place, I think. We were supposed to go to a different place, but I didn't get on. This seems like kind of an experience. Incel.
All right. I think it froze for you again. So let me go back. You know, the time is shifting. We get solar flares. You're getting solar flares. You know, the connection's not gonna be good when you're using Wi-Fi right now.
San Bernardino. You been to San Bernardino?
I have.
What are your thoughts? A little sketchy, right? It's not LA, is it?
I like the county.
The county, okay. I don't know what that means. But, that's alright. The city is cool too. I'm sure it is. So this is a new place, I think. We were supposed to go to a different place, but I didn't get on. This seems like kind of an experience. And I like it. This is a little more intimate. This is kind of fun. It's a big crowd. I can't see any because it's super bright out and it's blinding, but I'm warming up here. And we got 4 minutes. I still got another minute left, don't I?
You have like a minute and a half.
Perfect.
But you don't have to take it if you don't want.
I got one more term I want to throw out there. Incel. Incel is another term. You guys hear that term on the internet?
Oh, yeah. Yeah.
Involuntarily celibate.
Yeah.
What does that mean, right? It means you go out and you try, but you fail. You fail a lot. I might be an incel, guys. I might be a simp. I'm an incel.
All right, guys. So we got some of that. Practice timing. Try it on Kill Tony. Yeah. You know, comedy is hard. So let's go and see how Ben Thorpe does. Ben Thorpe gets up there.
Hola. Hola. My name is Nick Maduro, and last week I had a hell of a week. And sometimes they say, well, why did you have such a hard week? I came and visited New York. It's okay. But they asked the question, why are you here? Is it because of the oil? It's not because of the oil. Is it because the Israelis? It's not because the Israelis. Is it because of Donald Trump wants to take over the world? No, this is not either. The answer is these hoes. These hoes ain't loyal. I'll tell you a story. So I'm chilling with my homies in Caracas a few years ago, you know. We're in charge of maintaining some of the oil infrastructure. And I'm not saying I really did a great job. You know, some things you let go, but it seemed pretty good. And so I'm with this girl. She's a nice girl. And she says to me, hey, Nick, why are you just hanging out here getting the petrodollars? You could be the dictator of this country. And I'm like, bitch, I'm not sure about that. I think Hugo's doing a pretty good job. I get a nice kickback. I think you have a dinner. So she says to me, no, I really think you're a dictator material. So I figure, okay, fine. Hugo's probably got 20, 30 more years in him, no problem. I'll put my 2 years later, son of a bitch, she somehow arranges. So I'm the new dictator of Venezuela. So I says to her, I'm not sure this is a good place to be. Because it's dangerous. Everybody's talking about how the communism is working. There's no more petrodollars. Then Donald Trump is coming. And I'm telling her, listen, we good. They tried to get the Spanish people out of the United States, not into the United States. But, you know, I wanted to make sure. So I told her, she said, okay, I'll make sure you're safe. So she goes to the Chinese, and they say, oh, yeah, we're gonna protect you, no problem. You have all the oil dollars, we'll protect you. And she goes to the Russians, she orders all the best anti-aircraft missiles, all the latest technology from the Russians, and then Putin tells us, oh yeah, we good, I swear, we're no problem. And then, I'm chilling last week. I've got the Russians, I've got the Cubans, I've got the Chinese. And all of a sudden I hear these flashing, these banging outside. And I look over at her and I go, you bitch, you didn't do this to me. And she giggles a little bit and says, Nikki, it's time for you to go. So I say, okay, let's go to the safe house. We paid all this money to invest, the best safe house in the world. And we're in the safe house. And she can't get the thing fucking closed. She can't close the door. And as I'm looking at her trying to close the door, I see she gives me a little wink. And then I hear the Delta Force come. And they say, Nick, it's time to go. Now I'm sitting in a penitentiary 24/7. She's in the cell next to me, complaining constantly. These hoes ain't loyal. Now my hands are just going to take me away. Thank you very much.
That was amazing. That was absolutely fucking epic. Hell yeah. Hell yeah. That was amazing. That was amazing. No, they didn't know what to do with it.
It's a tough crowd.
Tough crowd. I would think New York, they get them in a, let's go. No, it was really good. Really good. You got accent, you stayed in character. You think it was the easiest crowd you could ever hope for? Yeah, but they were there for like stupid lesbian jokes, you know?
He
I don't know,
performed
you
with
think it's a
gusto.
comedy act, it's just like performance.
And
art,
it was amazing. Absolutely. I'm guys, awesome job, both of you.
You all right?
Awesome job. No one laughed, but he was good. Chat thought you were amazing. That group, they were looking for like, oh, I'm nervous. I had sex. I have a latex allergy. You know. They liked the needy comedians. That Asian woman liked it. The woman who went before you, the Vietnamese woman, she liked it. I saw her.
Yeah. All right. Well. Okay, guys. So Jeremy's streaming right now. He's on the road again. He left the John Galt plantation. He'll be back some other time. But if you want to continue supporting the content over there, yes, Jeremy Peterson, you know. So you can go Jay Peterson, his backup channel. Jay Peterson, backup channel 2028 on YouTube. And his main channel should be operational tomorrow at Peterson 2028 without the J. Peterson with an E. And they'll be on Thorpe Tube when he gets over to the Thorpe's place in Rhode Island, probably tonight. Now I'll end it with this. This is how I'll end the stream. More money issues, you know? More money issues. So this is why you should learn. All right, so this is how I'll end the stream. I don't know how much you caught of that. I'm going to end the stream this way. We're going to go over this last part of last night's streams when they get into the toll plaza. They got to pay tolls on the road.
The ringer off.
I think I don't know. I'll feel it out. We'll see. I mean, do I honestly think I can make it at comedy? That was really fun. It was fun, like actually getting classes.
Oh, you're saying it's not really a potential career path.
Right.
You don't see it as a realistic career path. All right. Well, you're a bit old, probably, to start. But that would be true of any career at this point.
Right. Except for streaming.
Distinction in chat. Distinction says, "Tell Jeremy we're proud of him."
Tell Distinction he owes me $500.
Jeremy, I got something that brings you talent. You get a food truck, and you have Courtney make Ethiopian food, and you bring it to Brown University. That's money. Because you'd be the only Ethiopian place between Boston and New Haven.
That is true.
I don't really want to work food trucks. I'm trying to get out of the whole cooking thing myself.
Well, what do you want to do?
Figuring that out still. I want to be a streamer, right?
Well, why didn't you stream any of that?
Because you were streaming it.
Oh, you could have told me that.
And I had to serve my battery for GPS.
Well, I mean, next time, buddy, let me know. I'll be GPS. Yeah.
And have a panel.
Distinction.
And have all the haters on top. They're fucking evil. That'd be good.
Yeah. We tried to get Patience to do that. He
They'll
couldn't really handle it.
They'll say oh, they're gonna try. They're gonna stab you in the back.
Well, we've already done. I mean, it's an unburnable bridge, just like OPC, just like Lalo. Actually, better than Lalo. Lalo is like, you destroy the bridge, he builds it back himself. Nobody wants it. Yeah, it's like it's. Damn, missed exit.
Again.
Oh, now we got more tolls.
No.
Oh shit.
At the audience were blue-haired liberals.
Tell Jared to check Cash App? No way. He sent 100. Pussy! You said 5. That's nice though. Hey, where's my 100? I'm the one who got Jared to do it. You think Jeremy would have done stand-up if I wasn't here? Fine.
That was a good scenario. Well, he put
Now imagine if this handicap was drinking talk about missed exits.
I just missed my exit, so that's right.
1690. You did not just $16.90.
Oh, because you didn't have a ticket.
Oh my god. That is ridiculous. Jer.
How am I supposed to know that one? Yeah, I should have gone that right.
What are they gonna
I need to
do?
go to the right. Right,
You gotta stay straight towards 19 South. Oh, that's over on that side. This is west to Clinton Express. Whoopsie. Oh, we are not headed in the right direction. Oh no, we're on the expressway. Fuck.
At least we're nice and warm.
Okay.
Alright, just added 2.
Now we gotta go all this way down and turn around. Okay, whatever.
Oh, because you're on the expressway.
Yeah.
That's highway robbery.
Yeah, it is. Town full of losers. Rolling out of here.
So, now we learn about the East Coast and all their tolls. I have no idea what's going on. You know, I'm in the West Coast. All our taxes go into the pump. So when you go to the pump, you can see how big the taxes are for gasoline and diesel. So that's where the taxes are. But in the East Coast, it's a different game. The gasoline's cheaper, but then you got these tolls. I don't know. Anyhow, whatever, guys. Oh, 3 hours, 18 minutes. I got through it. Okay, perfect. So you're up to date now. Starting next week, we will start looking at specific stocks and how they will go, where we want to place our bets for the coming next 3 months. And then we'll update everything as we move along. That's how we're going to go. Texas is paradise. Maybe eventually, yeah, I'll have to go down there. These two kiddos are together now. Well, yes, they are. They will be for the foreseeable future. That's where the game plan is. Go to TheUrbanLandord on YouTube and Kick. That's where they at. Or Jeremy's 2 channels. Okay, guys, that's where it's at. I don't know when he'll be back to see John. That's to be determined. But right now, Grace has wrestled Jeremy away from John Galt. So no more white slavery. John Galt, not the white slavery meaning female slavery. The white slavery meaning literal white people being slaves. That will come later. So all right, see you around, roller skater Texas girl. I'll see you around. Hopefully, no other kid will try to get me sick through their parents. All right, so we'll see how that goes. All right, later.